Good evening, friends. Welcome to the next technical session, virtual coaching classes organized by Board of Studies ICI. Today evening, we are going to have a discussion on paper 8, Indirect Tax Laws. In this paper 8, we are going to discuss on chapter 7. Chapter 7, which deals with the topic called value of supply. Yesterday's session, we had a discussion on time of supply, chapter number 6. So, you have any queries in relation to yesterday's session or the topics which we are going to have a discussion on today? I request you to put into the question window so that I can get that query clarified instantly. Coming to today's session, we have today's topic on value of supply. So today what we are going to do, we are going to have a basics of value of supply where we will understand why at all value of supply is relevant, what do we understand by the term valuation under GST law, why is that it is so important for a professional or tax practitioner to know the term valuation. If that process of valuation, the provision does not exist, what will happen to the revenue collections? We will try to have a clarity on that. We will pick up some examples. We will have a view of the practical scenario. How this valuation chapter is going to guide us. It is going to help us in terms of determining the value on which GST is to be paid. From there, we will see a couple of definitions which are key important aspects for us to understand this particular area of value of supply. Then we will move on to the section 15, which deals with your value of supply. Section 15, there are 5 subsections. We will have an understanding of each of that subsection. What is the purpose behind this particular subsection? How we need to address that particular provisions when we come across our day-to-day transactions. From there, we move on to something called valuation rules. From section 15, we will migrate, we will transfer, we will travel to valuation rules to understand various given scenario, what is there in for us to understand in this particular rules. Finally, this is the last leg of our discussion, learning expectation. This is one particular slide which we are going to have a discussion to have a macroscopic understanding of what is therein for us as a professional when we deal with this particular area called value of supply. So friends, we will start with our discussion for today on this particular value of supply. To start with, basics to understand transaction value for payment of GST. When we talk about this topic called value of supply, why is that this particular term value of supply is relevant, or what is that one has to understand is nothing but when someone has been registered under GST and someone is paying tax of GST, the question comes from the department, the question comes from the officer concerned per se to say, have you paid your tax properly? Have you paid your tax properly? That means to say, when you have got into a business transaction, in your business transaction, there are such circumstances where there could be a valuation, there could be a value which is undervalued, either intentionally or unintentionally. So this particular chapter gives us a guidance, various scenarios, various examples, various transactions, how one can determine what is the value on which I am supposed to pay GST. So when we walk through the provisions, I'll give you the practical examples to make you understand how important it is for fixing up this term called transaction value. Understand? When we pay GST, the key term for determination of tax is this term called transaction value. As an assessee, as a registered person, we are going to pay tax on this particular element called transaction value. From there, we have to move on to understand something called contractual terms of supply. This is one of the key important aspect. This is something one has to understand when you get into your practice. Once you get qualified, once you get into the corporate world, each and every contract, we need to understand, we need to study the various commercial terms involved in a particular contract. I'll give an example. Say I'm into process of bus body or a chassis manufacturing activity. In southern India, we have a company called Ashok Leyland. If you look into this entity called Ashok Leyland, they are into chassis manufacturing. They are into manufacturing of chassis for this heavy vehicles. The lorry tipper, what you see, the outer external body is not manufactured by Ashok Leyland. What they manufacture is just the bare body. They have the engine, they have the structure, the chassis, which is manufactured by Ashok Leyland. Now, when we look into this particular activity, assuming for a moment, there is one entity called L&T. L&T approaches this company called Ashok Leyland. They say, look, we need to have one chassis manufactured. This chassis is not the typical chassis what you manufacture. We need some customization to be done. There is something called a motor which has got a capacity to rotate a particular chamber. When you see this concrete mixture, like when you have to lay road construction, there is a vehicle which has got a concrete mixture. So Ashok Leyland has got an order from L&T where L&T says, look, I have machinery which has to be fitted into the chassis so that both can function together. Now, when you look into the commercial terms, Ashok Leyland is supposed to give a delivery of a chassis. Now, that chassis becomes complete only when there is a motor, fixed to this particular chassis. So what is relevant for us? To understand? What is your commercial terms? I being a supplier, what is that I have to supply? You being a buyer, you being a purchaser, are you going to buy the material as it is, or you're going to give any of the material supplied in the process of final delivery which has to be done from my end? So this particular aspect, commercial terms, is something which is very important. We will pick up one example in relation to job work. When I go to section 15, I'll give you in detail how these commercial terms are relevant. First, one, to understand how we have to determine this value of supply. Next is your come basis levy. When we look into the contract, when I recover money, when I get money from my customer, is the money inclusive of taxes or exclusive of taxes? Assuming that if the consideration is inclusive of taxes, how do I calculate what is the value on which tax has to be paid? So looking into the commercial terms, looking into the contractual obligation, we need to get into this valuation mechanism. So this one aspect important for us is to understand what are the commercial terms between the supplier and the buyer. So when these two parties are there, are they related party? Are they independent parties? And what is the terms of payment in between these two particular parties? This is one another aspect which we need to keep in mind when we get into this topic called valuation. Next, treatment of transactions between related party and unrelated party. This is one of the heartbone of entire your chapter 7 called value of supply. So this particular chapter, value of supply, is going to determine first and foremost when you look into a transaction between seller and transaction between the buyer. So this seller and buyer, are they related? If they are related, what should be the transaction value? Can I accept the transaction value on the face of the document, or should I go beneath the transaction to invent, to discover what is the hidden value which is to be called as a transaction value? Now, why is that so much of stress given to related party? Undervaluation of taxes, tax planning, tax evasion. There could be a possibility. Entity A is there, entity B is there. Entity A is a profit-making company. Entity B is a break-even company or yet to make a profit. Now, assuming that there is an accumulation of input tax credit in this entity B, and there is no input tax credit accumulation in this entity A, which is a profit-oriented company. What if all the unliquefied, all the profits, all the input tax credit which is being accumulated, which was not being enjoyed by this sick entity, if I want to migrate, if I want to transfer to another entity, will that mechanism of valuation come into picture to see whether there is an overvaluation, whether there is an undervaluation? The officer concerned can question this value of supply and to set aside the value what you have adopted, the value what you have accepted is not accepted, and I will redetermine a value if that situation can arise. That is also something which we will try to understand in the process of these provisions. Further, possible adjustments in transaction value and impact on payment of taxes. This particular chapter, when we are reading through, we need to understand if there is a unrelated party transaction or if there is a related party transaction, the transaction value which was quoted for payment of taxes, can there be a possibility that the value can be arbitrarily, notionally elevated or escalated, or can there be a reduction in that particular transaction value? So all this plus and minus, addition to the transaction value, deletion to the transaction value. Are there any mechanism under the provisions of GST for doing such adjustment? And finally, impact on payment of taxes. What tax I have paid, what tax I am ought to pay. This is what we will determine by reading this chapter called Valuation, value of supply. Finally, guidance required from this section 15 and relevant rules. When we read through section 15, which deals with your value of supply, all across your section 15, we'll get a macro picture of what is the objective of the lawmaker, that is the GST authorities. Entire section 15 is going to define what is the objective for me to collect the taxes. For a moment, take an example. I have raised a tax invoice and have paid tax on a sum of rupees 1 lakh. Assuming the rate of tax is 18%. On 1 lakh, 18%, 18,000 tax was paid. After a period of 1 year or 2 years at the time of departmental assessment, the officer says, look, you have adopted 1 lakh, but as per the valuation mechanism, 1,25,000 should have been the transaction value. On 1,25,000, you are supposed to pay the GST. On 25,000, 18% GST. So already have paid 18,000. 1/4 of 18,000 is your 4,500. Now the officer is demanding additional 4,500 to pay the tax along with interest, along with penalty. 2 years back, I did a transaction. I have charged GST from the customer, and the customer is not having any transactions with the business. Now when I have to pay that particular transaction value, that tax of 4,500, which is almost as good as 5% of your transaction value, do I have enough margins to withstand to the demand which is going to be raised by the department officer? So these are the basic things. These are the basic things which one has to keep in mind when we read through this particular topic called value of supply, determination of value of supply. As and when we discuss, as and when we walk through, any of questions you have, any of the practical issues you have come across, or you feel that there is a element of point which is not clear, or any of the language, any of the term which I have used, you need little more clarity to understand, please put into your question window so that I can throw some light on that particular aspect for better understanding. Coming back. Now, we will start with, as we did yesterday, I'll take up a few examples so that you can get a better clarity. You can get a better clarity to understand what is therein for us under this chapter 7, that is dealing with your value of supply. Again, end of our discussion, we need to be in a position to answer the questions which are there listed over here, and also the questions which are given for you to practice upon. To start with, first example, Mr. A practicing chartered accountant, conducts internal audit and issues a bill for a sum of rupees 1,50,000. As per the engagement letter, he can recover out of pocket expenses. If he has to recover 12,000 along with the audit fee, is GST payable on the above reinvestment? Now, what is going to happen? In this particular example, Mr. A is a chartered accountant in practice. This gentleman was appointed by a company for the purpose of conducting an internal audit. As per the terms of engagement letter, the company says, look, if you have incurred any of the expenses in relation to the conducting of an audit, you can recover those expenses as out-of-pocket expenses. Now, when this gentleman, Mr. A, raises a bill for 1,50,000 and shows out-of-pocket expenses rupees 12,000, the question comes here is, what should be my value of supply? Assuming the rate of GST is 18%, you can confirm whether the GST should be paid on 1,50,000 or 1,62,000 on which I have to pay GST. Whatever answer comes to your mind, whatever logic comes to your mind, you can put your answer into the query window along with your inputs, so that we will evaluate, we will discuss. When we read through the provisions, we will come back to this particular question, we will understand the GST provision, and we will get a clarity how we need to correlate this particular question, how we need to correlate this particular scenario with the practical provisions which we read through in a later stage. So any of you have any answer for this particular question, you can put into your question window so that we can discuss on that particular thing at a later stage. So the question here is, should I charge on 1,50,000 or should I charge on 1,62,000? Next, second question. ABC & Co. is a manufacturer of plywood boards. Normal selling price to a walking customer is 1,000 per board and rupees 800 to an authorized dealer. 800 to an authorized dealer. Can a GST officer question the above disparity in pricing adopted? Now, all of us are coming from the fraternity of audit background. Most of you have finished your internship or in the verge of finishing your internship. When we pick up the sales area for the purpose of audit, first and foremost thing, what we do is we try to put a variance analysis. What is the product sold during a particular period? This product which was sold during a particular period, what was the selling price adopted? Customer A, customer B, customer C, when we have various customers, for each customer, what is the selling price? As an auditor, what we would be interested to do, what we are interested to look into, what is your cost of goods sold? What is your selling price? Now, when I compare my cost of goods sold with my selling price, do I make a profit margin? Do I have a negative margin? So if at all, if there is a profit margin, again, we will recheck. Your profit margin, is it 5%, 8%, 10%? What is the parameter management has set for loading your profits? Now, if there is a variance, customer A 5%, customer B 3%, customer C 8%. We would be interested to understand why is that there is a disparity. One place you are charging 5%, another place you are having 3% profit margin, another place you are having 8% profit margin. Now, this particular mechanism of pricing, when we adapt, is there a possibility for the department officer to question? I don't admit your valuation mechanism. Wherever you are paid the value on 1,000, I go with you. Wherever you are paid the value on 800, the GST on 800, I wouldn't accept your valuation mechanism. Rather, I would go with my own valuation mechanism where I redraft. Notionally, I'll add 200 rupees back and determine what is the shortfall in payment of GST. When we are reading this particular chapter, that is chapter 7, which is dealing with your value of supply, keep in your back of mind, there's one provision which is under section 73, section 74. These are the two sections, section 73, section 74, which deals with your assessment provisions. Now, what is therein for us so important to understand? Section 73 says that an assessee who is a registered person, who is ought to pay the tax but not paid, who has collected the tax but not paid, who has short remitted the tax. Now, there is a term used, short remittance of tax. Now, why there is a short remittance of tax? Because of my valuation. The officer, the departmental authority who comes for assessment, who comes for scrutiny, Possibility is there that they reject this, set aside your transaction value or the value on which tax was paid, and they may adopt to say that, look, 200 there was a shortfall, on 200 let me also add GST. I would put back the question to the viewers. Whatever views you have on this particular example number 2, should I adopt value of 1000 to pay the GST, or is it okay if I pay GST on 800? Whatever answers come into your mind, please put into the window so that we will discuss the same once we again get back to the GST provisions. Right or wrong, let us understand what is there in this section 15. What is my understanding? Where is that I need to bridge the gap of my understanding with the GST law? Continuation. Third example. Miss Pinky goes to a jewelry shop to buy a golden ring costing rupees 25,000. She exchanges her old ring worth rupees 3,000 and pays only 22,000 in cash. Shop owner charges GST only on the cash collected portion. Examine the GST compliance. Now, this is one peculiar scenario where most of the business people or most of your relatives who are in around your circle, the moment they get to know that you're doing your CA final, or if you have finished your CA, first and foremost thing is, wherever they see you, they presume that you are a family doctor. They come with all practical questions like this to get a clarity from you. Now here in this example, what happened? This lady called Pinky, she has gone to buy a ring. The cost of ring is 25,000. She has an old ring, like usually, like if we look back our own family background, when we try to purchase jewelry for any of the occasion or event, parents, what they do, whatever old jewelry is there, which is like in the childhood days, they would have purchased small rings, earrings, etc. As and when the child grows up, the small rings which were brought at the childhood stage, they will try to exchange for a new jewelry. Now that is a typical scenario we are talking about. Now in this example, 25,000 is the cost of the ring. So this shopkeeper, he sold the ring for 25,000 because he has got an old ring. What he has done, he charged 22,000. What was the cash collection? On that 22,000, he has collected the GST. What if the shop owner says, look, you have given old ring, but since 25,000 is the cost of the ring, I'm supposed to charge GST on 25,000. What will happen to the consumer? What will be the view of the consumer? Like these days, like especially everyone is saying that you buy whichever ornaments, whichever articles you buy, please demand for a bill from the shop owner. For the simple reason, the taxes what we are paying on that particular purchase, let the tax be genuinely going to the government of India, so that there could be a prosperity in nation. Now this particular practice, for a moment, assuming after a 2 years span in time, there is a departmental audit which is going to happen. Now most of us, like when we are giving our exams, or once we get qualified, we have this audit background, we have this audit skill set which is going to give a clarity. When we do an audit, is there a way for us to find out, for this transaction, for this particular transaction, I have received an old ring in consideration for 3,000 and I have collected only cash of 22,000. So question to you who is listening to me. Now when we do an audit of this particular SSC, post-mortem analysis, when we do an audit, is there a way for us to go back and say, look, this particular transaction, you have sold an ornament for 25,000, though you have received exchange 3,000, though you have received cash of 22,000, there was an undervaluation for a sum of rupees 3,000. If your answer is yes, can you just let me know what is the way we can find out that there is an undervaluation with respect to this particular transaction? I would like to understand from you, what is the mechanism one can find out that there is an undervaluation? Glad that many of you have given answers for query number 1. Also for query number 2. Yeah, what I will do is I'll get through your answers one by one. Time being, for third question, can you put in what is the way, what is the mechanism we can get into this transaction and say this is undervalued. Instead of 25,000, 22,000 only GST was paid. Is there a way for you to find out that 3,000 was there in the transaction but you couldn't find out? Okay, I could see that a couple of you have given answer. The valuation should be done on 25,000. Okay, the value of old ring is 3,000. Received is the method of payment adopted by Miss Pinky. Okay, payable on 22,000. Dilip says that GST is payable on 22,000. Let us discuss, Dilip. I am not going to say yes or no at this moment. Let us get the thought process. Then we will get into this mechanism. I got a very good answer. Mahindra says value adopted by the shop owner is not correct. Two transactions. FC for original gold supply, RCM for purchase. I admit your answer, Mahindra, but what is the mechanism? What is the mechanism for us as an auditor? As an auditor, we can dig out that there is a transaction for 3,000. I have raised a tax invoice for 22,000. On 22,000, I have charged GST of 18% or say 3%. Now, how do you find out that 3,000 is missed out? Good, good, good. I got a couple of answers. There will be 3 different transactions. One, I have to take input tax credit on the supply. Okay. 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 Undervaluation. Okay. Okay. Transaction shown for 3,000 on the face of the bill. Very good. Very good. Valid answer. Couple of inputs I have received from some of your friends who have quoted. So when I raise a bill, on the bill I'll mention that 3,000 is the old ring value exchanged. 25,000 minus old value 3,000, value in supply 22,000, charged on 22,000. So a couple of your friends gave an answer. When I look into the bill, I'll get to know the evidence of the 3,000. And one answer I have received. So when we look into the material value, there is an answer. When we look into the material value, I cannot get into a transaction when COGS is 25,000. I cannot definitely sell it for 22,000. Especially as an auditor, when we do the auditing, what is my purchase cost? What is my selling cost? When I do comparison of line to line, wherever there is a negative profit margin, that is a catch for us to understand that there is a undervaluation of the product. Keep in mind, there is a slogan which says that there is nothing called free meal in this world. Then when the business is happening, why would someone get into a business transaction where there is a negative profit margin? Wherever there is a negative profit margin or wherever there is a dip in your selling price, then that is an indication that there is an undervaluation. That why undervaluation happened? Because of this kind of exchange. So friends, we will get into this particular sorry, let me just share the screen back. Just give me a minute. Okay. Hope my screen is visible. Let me put the PowerPoint presentation. Yeah. Hope you are able to see my screen now. So this example, this is one indication. This is one indication where if at all there is a transaction where there is a negative margin or the margin is deviating from the regular margin, that is an indication of my undervaluation. We'll go on to the next example. Mrs. ABC & Co., a travel agent, purchases an air ticket on behalf of Mr. A. So there is an agency called ABC & Co. and there is an individual customer called Mr. A. This travel agent purchases an air ticket on behalf of Mr. A for rupees 15,000 from Airlines Authority. Travel agent charges a commission of rupees 500 on every booking and 300 on every cancellation. If the passenger, Mr. A, pays a sum of rupees 15,500 to the agent, examine on what sum GST is payable. So this is a question set in the backdrop where there is a prescribed valuation mechanism for these kind of transactions. Now imagine for a moment, you, like many of us, when we need to travel on air for the first time, thankfully these days, e-commerce platform, you have the mobile connectivity on mobile. The moment you say I have to book a ticket, this various e-commerce websites are open where you can place your ticket on the e-commerce website. Let us travel a decade back or 5 years back in time. Those are the days when we are talking about a travel ticket booking or even a rail ticket, train ticket booking. We have so-called agents where we get the tickets booked from those agents. Now this example, the cost of a ticket is 15,000. Now assuming this a ticket of 15,000 was purchased by this agent called ABC & Co from the airline authorities. For a moment, let us assume that there is Jet Airways, which is not functioning now. Let us take Indian Airlines. Now, Air Asia. Air Asia is a service provider who charges 14,800 as a ticket cost to this agent called ABC & Co. This ABC & Co keeps a margin of 200 and in turn he sells the ticket for 15,000 to this Mr. A. When you get the ticket, on the ticket there will be some charges. You will not get clarity what is the total cost of the ticket. Like when we travel back in time, a decade back, it is very tough for me to decode what is the actual cost of the ticket this agent is paying to the airline authorities. So that is the point in time where this example was picked up. So when 15,000 is the cost and 500 is the commission, the question comes here is, as an agent, should I charge GST only on this particular 500 or 15,500 or only on 15,000? This is one question picked up from the backdrop where one has to understand what is the guidance value or what is the mechanism GST law has put in place to make us understand what is the value I have to consider for charging GST. So coming back, friends, this particular examples, whatever I have said till now, this is just an eye opener for us to understand. When we are talking about GST law, when we are talking about this chapter called value of supply, we need to read this chapter to understand various permutations and combinations possible, how well the provisions are drafted, like bucket A, bucket B, bucket C. Bucket A, independent parties transaction. Bucket B, related party transaction. Bucket C, where there is a specific charges like this A travel agent. So we have to call various clusters. For each cluster, what does the GST law say and how do we do the valuation for this particular mechanism? This is what we will understand from this particular chapter 7. Now, starting with definitions. First definition we will pick up is agent. As per this provision, GST law section 2, the term agent has been defined this way. Agent means a person including a factor, broker, commission agent, arhita, del credere agent, an auctioneer or any other mercantile agent by whatever name called, who carries on the business of supply or receipt of goods and services or both on behalf of another. So here, if you look at the term, I have kept on bold, who carries on the business, So when I refer to someone as an agent, this fellow agent should be in the process of carrying out a business. Now, for what purpose? Supply or receipt. So this agent, he is either supplying the goods or receiving the goods. He is supplying the services or receiving the services. Now, for a moment, if we stop here, it says supply or receipt of goods. Let us ignore services for a moment. Supply or receipt of goods. I understand, assuming that I'm a principal, I'm into the business activity of trading in this cereals. Say I'm a trader in rice. I'm a merchant in rice. What I do, I would like to procure basmati rice. Assuming I have a business in Tamil Nadu. I want to procure basmati rice from Punjab. I cannot afford to travel all the way from Tamil Nadu to Punjab. Rather, what I'll do, I'll call Mr. X over phone and say, look, I need so and so quality and so quantum of rice. Can you procure on my behalf? So here, what is happening? That agent is receiving the goods. Agent is receiving goods. Now we understand supply receipt. So what is this agent is doing? He is supplying the goods. He is also receiving the goods. When I say supply the goods, what does the agent do? He procures the goods from the principal. In turn, he sells the goods on behalf of the principal. A classic example we can think of is your cement manufacturing activity. When you think of this cement manufacturing activity, take example of Ultratech. Take example of Bharati Cements. These manufacturers, L&T Cements, etc., when they manufacture this particular product, they have to sell through dealers or sell through their authorized agents. Now, this concept of agent was more or less washed out after GST laws come into picture. This has very, very prominence prior to GST law under VAT law. For the simple reason, when principal transfers goods to agent, it is not to be considered as a sale. Referring back to Sale of Goods Act, when principal transfers materials to agent, then it is construed not to be a sale transaction. That is how under erstwhile VAT laws, the principal appointed agents across the state, and through agent he used to make a sale. Unless the actual sale gets recorded through agent, that need not be reported, that need not be offered for taxation under the erstwhile laws. But under GST law, this concept was completely killed down. So what they have said, there is an agent, there is a principal. Even principal to agent, it is deemed to be supply under my Schedule 1 of GST law. When we have read section 7, which deals with your supply, section 7 read with your schedule number 1, where there is no consideration. If there is a transaction between a set of people defined as per schedule 1 of GST law, that is deemed to be a supply under section 7. Coming back to this chapter 7, value of supply. For this definition, agent, we need to understand, he is a person who is doing a business activity for supply of goods, for supply of receipt of goods. This is good enough for us to understand. There is a term used, goods or services or both. This is the crux again why GST law is very, very important for a professional to practice in this particular area. Now, is there a mechanism where services are received by an agent? I understand goods, but services, agent is receiving the service and in turn is making a supply of services. Now, when we get into the valuation mechanism, I'll pick up few examples where you get to know why this agent definition is relevant for us to understand the ambit of goods or services. So here we need to understand this term, the agent, is something we have to keep in mind for understanding value of supply. Second definition, consideration. Take it from me, friends. Chapter 6, Chapter 7, Chapter 2, Chapter 3. When you deal with these chapters, that is, which is dealing with your supply, which is dealing with your levy, which is dealing with your place of supply, which is time of supply, which is also dealing with valuation. These are the 4 chapters which has got a wide application of this definition called consideration. Then there is also one chapter called exemptions. You read through this definition carefully because enough practice is there revolving around this particular definition called consideration. We'll understand the microscopic view of this consideration. Later when we move on to the chapter, we will understand how to read this. Consideration in relation to the supply of goods or services or both includes. Now, if you read the language, they say consideration in relation to supply of goods or services. So, when you look into a transaction, that is when you have say 100 transactions for a particular period, you pick any one of the transaction. This term says for that transaction. Why that transaction? It is a supply of either goods or supply of services. That supply, that particular consideration includes, they say includes, it says it is including, means 1, 2, 3, 4, whatever I'm going to talk is it has to be included for this term called consideration. What it says, any payment made or to be made, whether in money or otherwise, in respect of, in response to, or for the inducement of The supply of goods and services are both, whether by the recipient or by any other person, but shall not include any subsidy given by the central government or state government. Now, this definition, I'll spend decent time on these definitions for the simple reason, when you get more clarity on these definitions, your entire interpretation, your entire subject is revolving around this particular topic. So give importance to the language which I have used. It says any payment made or to be made. What is this made or to be made? You can put your answers in your question window. Any payment made or to be made. Payment made, it is an event which is completed. Payment to be made, is it a future event which is likely to happen? When I say payment made or to be made, now can I call that payment made is a cash transaction, payment to be made is a credit transaction? Can I call that way? Answer that for that is any payment made or to be made, payment made or agreed to be made. So I am going to fix something called payment. My consideration includes the payment where money was received or money is yet to be received. Further, whether in money or otherwise. Now we will understand this term, definition of money also little later. What it says, my consideration, that is my payment, was received in money or otherwise. What is that money or otherwise? You have your bill of exchange, you have your LC, you have your check, you have your negotiable instrument, or you have your any other mode of payment. All that form part of your consideration, that is your money. Money or otherwise, conjunctive word. They are using lightly money or otherwise, money, physical money, which is recognized as a legal tender, or any instrument which is recognized by Reserve Bank of India as a legal tender equivalent to money. So this term we have to read together called money or otherwise. In respect of, now please read, understand carefully. This payment was received by in respect of a supply, in response to, the payment was received in response to, or for inducement of. In response to is, it is a reciprocal mechanism. Inducement of, for the inducement of. What do you mean by this inducement? It is giving force, giving effect to a contract. When I get into a transaction, when there is a coherent force by virtue of a contractual agreement to get another event to execute, that is a mechanism where they are trying to cover at a macroscopic perspective. The supply of goods or services are both, whether by the recipient or by any other person. Now this is another catch. All along what we are talking, this payment, what I am talking, whether in money or in another term, is received by the recipient or by any other person. So when I receive money, if I receive from the recipient, if I receive from a third party, both to be considered together for the purpose of this term called consideration. I'll give an example. I'm an event manager. I conduct an event in a particular, I conduct for one event for a particular high net worth individual for a particular birthday function or some other occasion. This particular event, I say its total cost is 5 lakhs. So this particular person says, look, you charge me only 4 lakhs. I'll ensure that 1 lakhs comes from you from various other sources. So he has officially, like from a company where he's doing the business transactions, he can officially pay 4 lakhs. Balance 1 lakh either paid in his personal capacity or through his wife account or through some other account. What they're saying, when I receive money from X, Y, Z or PQR Limited, ABC Limited, when there are various people, various sources, when I receive the money, all that consideration pulled together, I correlate with the transaction. That is called consideration, but shall not include this consideration, that is this payment shall not include what? Any subsidy given by the central government or a state government. So if you are doing a business activity, if I receive any money from a state government or central government by virtue of a subsidy, then they say this is not to be included in consideration. I'll give an example. In South India, you look into Tamil Nadu, you look into Andhra Pradesh, you look into Telangana, you look into Karnataka. These states have one scheme in the name of a leader, in the name of the deceased leader, where they say you walk into any of the canteens which are run by the, not run by the state governments, which are funded, which are aided by the local governments. What they say, you collect, when someone walks in for having a meal, you collect only 5 rupees from that gentleman as a meal. What the government says, the cost of meal is 10 rupees. The cost of meal is 10 rupees. You cannot collect 10 rupees from the walking customer. You collect 5 rupees from the walking customer. The balance 5 rupees will be given by the state authority or central government by virtue of a midday meal scheme. Central government by virtue of a midday meal scheme. So in midday meal scheme, I supply a meal having a cost of 15 rupees. The central government says you collect 10 rupees from the so-called local authorities or local clients, and the balance 5 rupees I transfer directly to your account by virtue of a subsidy. So what they say, when I collect 10 rupees in first example or 15 rupees in the second example, to the extent of 5 rupees subsidy, they say needs to be excluded. So when I do the calculation, when I need to charge GST, walking customers, when I receive cash of 5 rupees, charge GST on 5 rupees. The balance 5 rupees I'm going to receive back from the state government or central government. How? By way of a subsidy. They say don't consider that for the purpose of consideration. Hope this definition is clear to this extent. Moving on further, this is another catch which is vitally important for us to understand from this definition. Point B, it says the monetary value. Now, if you look into the definition, point A, clause A, it says any payment, which is as good as money. Clause B, it starts with monetary value, means it is not physical money. The monetary value of any act or forbearance, means any activity or forbearance. Forbearance is nothing but an abstaining from doing an act in respect of, in response to, or for the inducement of supply of goods or services above, whether by the recipient or by any other person, but shall not include any subsidy. What they are saying, if there is a monetary value of an act, what is the monetary value of an act? I need to construct a dam. I need to construct a dam. For constructing of a dam, I need to get a clearance from the local authority. Once I get a clearance, I need to procure raw material. So instead of buying cement, what the government says, look, there is a cement which will be supplied by the local civil supplies authority. Now here, when you look into this term consideration, monetary value of an act, cement which is given by the state authority for the purpose of construction of a dam, it is a monetary value which is given in relation to, in respect of, in response to, for supply of goods or services, whether by the recipient or by any other person. Now in this example, assuming state government is getting a bridge construction, instead of state government giving that cement free of cost, say there is a local business people who voluntarily come and give the cement back. Now here what they say, monetary value of an act which is given directly by the recipient. Once I do the bridge construction, I have to hand it over to the recipient called so-called state authority. Here I'm not handing when I handing over to the state authority, I receive cement not from the recipient per se, by any other person, So if any other person is contributing for this particular supply, that shall also form part of my definition called consideration. This is the crux of your clause number B. Moving further, provided that a deposit given in respect of a supply of goods or services, if there is a deposit given for the supply of goods or services, shall not be considered as payment. When you look into clause A, when I have received money by virtue of a deposit, they say please exclude the deposit from consideration when it is not considered as payment unless the supplier applies such deposits as a consideration for the supply. That means to say, I receive money as a deposit, as a refundable deposit. I give it back over a period of time. So as long as I keep that as a deposit, not to be appropriated with my consideration, then they say it shall not form part of consideration. If I receive money as a deposit, as and when I raise a bill, money gets adjusted from the deposit, which happens typically with this petrol and diesel bunk. If I am owner of a petrol or diesel bunk, when I have to procure the fuel, what I do, I give 28 lakhs to 30 lakhs as a deposit with Indian Oil Corporation Limited. When Indian Oil Corporation receives that amount as a deposit, what happens whenever they supply the fuel to the extent of, say, one container cost of 5 lakhs, 3 containers were sent today, from 28 lakhs, the 3 into 5, 15 lakhs will be appropriated, balance 13 lakhs as remains as a deposit. that cannot be called as a deposit in this definition for exclusion. Because I'm adjusting my billing with the deposit, I cannot exclude that from my consideration. Rather, if I keep that as a security deposit, then I have to consider that as exclusion from my consideration. Then market value, again, this is relevant for us to understand, shall mean full amount which a recipient of a supply is required to pay in order to obtain the goods or services or both of like kind and quality, or about the same time at the same commercial level where recipient and the supply are not related. In this definition, we have to correlate back to our example of Pinky. When this lady goes to the jewelry shop for buying this jewelry, where the market value of the ring is 25,000. Market value of the ring is 25,000. What we have done, instead of charging on 25,000, I have charged only on 22,000. Now that is one particular example where this definition is relevant. When we look into market value, it means full amount which a recipient of supply is required to pay. Look at the term required to pay. So if I am supposed to pay 25,000 in that example, in order to obtain the goods or services, so to procure the goods or services of like kind and quality, what they're saying, like kind is equivalent kind and quality, or about the same time and same commercial level. When this open market value is not available, like kind and like quality is something which you bring in from the determination of value of rules for the purpose of assessment. We will understand little later when we get into the definitions. Next is money. For paucity of time, we have discussed. I'll overlook into this definition of money. Now, coming to the crux of my section 15. My entire valuation, entire value of supply is revolving around these 5 subsections. Subsection 1, which deals with your transaction value. So in simple terms, my subsection 1 is going to define what is a transaction value and when you can apply, when you can go with the transaction value. Subsection 2 talks about value to include. When you are looking to the transaction, what is the value which you call as transaction value? What elements have to be included? Subsection 3, a discount which needs to be excluded. When you look into transaction value, from that transaction value, there is something called a discount. When I can deduct, when I can exclude that from my transaction value. Your subsection 4 talks manner to be prescribed. In case if I fail to apply my transaction value, either by virtue of subsection 1, subsection 2, subsection 3, then I'll be routed to fall into my transaction value. I have to search my transaction value in my valuation rules. We'll understand when we get in detail what are the reasons I travel to valuation rules where I fail in subsection 1, subsection 2, subsection 3. Finally, again, ancillary provision. Government retains its authority to notify a value for a class of supply of goods or supply of services or set of people. So this is ancillary provision. If you look into a majority of provisions, always there is a residual entry called government retaining its value, its authority to notify the value in relation to a couple of transactions. So this is a bird's eye view of my section 15. Let's get into section 15, subsection 1. Subsection 1 says, which is dealing with your transaction value. It says the value of supply of goods, services or both shall be the transaction value, which is the price actually paid or payable. The price is actually paid or payable for the said supply of goods or services or both where supplier and recipient of the supply are not related. Price is the sole consideration for the supply. Now, this is the entire language used in your section 15, subsection 1. That means to say, you as an auditor, you as a tax practitioner, you as a tax consultant, when you're guiding, when you're looking into a transaction, you can say on the face of the transaction to say, you have done the valuation as per the GST law. You have adopted transaction value which cannot be defeated, which cannot be questioned, provided all these conditions are satisfied. What is that? My value of supply, which is nothing but shall be a transaction value. The price actually paid or payable means when you raise a tax invoice, it could be a cash transaction, it could be a credit transaction. So if there is a cash or credit transaction, That value is your transaction value for what? Supply of either goods or services or both, where supplier and recipient, seller and recipient, seller and buyer are not related, not related. What is related? When can we call them as related? In the next slide, we will understand the relationship. So as long as you say my seller and buyer are not related parties, there are distinct persons, and price is the sole consideration. Understand? Price is the sole consideration. I was asking you in the example number 3, in the case of this exchange of a ring, where Pinky goes with the old ring. I was talking at that moment. How do you know price is the sole consideration? Friends who are listening to me, please understand, when we read our auditing, when we read our principles of accounting, we need to understand how do I keep transparency in my transactions. You happening to be an auditor of this particular jewelry shop, you will say, look, when there is an old jewelry which is coming in, you need to maintain something called inward supply of stock, inward purchase of goods from whom? From an unregistered party. I walk in, this lady called Pinky, when she walks into the shop, when she is giving an exchange, please raise something called a document for purchase of goods from unrelated party. When we have studied section 9 subsection 4, which deals with your unrelated party related transaction. So when you are dealing with 9.4, we have studied something called applicability of reverse charge mechanism in relation to unregistered supplier. Couple of you have mentioned in your replies that when you buy from unregistered party, you need to raise a self tax invoice, you need to pay tax on reverse charge basis. Yes, your answer is valid. What we need to do is, how do I maintain that price is a sole consideration? There is no barter, there is no exchange. Please understand, barter, exchange, these are two transactions very, very important. One is in jewelry business, second is your FMCG commodity products. When we talk about this electronic shops, what I will do, buy one get one, or exchange your old and buy new one. I go with my old television because of this year-end sale, clearance sale, various things, especially these mobiles. Because of this COVID, this offers from the e-commerce operators have come down. If you happen to see 6 months back, 9 months back, 1 year back, they say, bring your old mobile, take your new mobile. The market value of new mobile is 15,000. You give your old mobile, pay only 10,000, pay only 8,000. Where we say price is the sole consideration. Those transactions, price is not the sole consideration. Now, very, very, very important for you as a professional to determine when there is a transaction, when there is a commercial transaction, how we are going to fix up to say, is this an exchange transaction? Is this a fresh transaction? One, there is a related party. One, there is an unrelated party. So when there is an unrelated party, is this a price sole consideration or is this an exchange consideration? Assuming that this is an exchange transaction, will you give a invoice series? You will give your client a guidance saying that whenever there is an exchange transaction, please use this series called exchange EPS or some code. You'll say generate the invoices from ERP using this particular code. How you set your internal controls, how you set your auditing mechanism to identify such transactions, something which is important. So time being, Section 15 says that on the face of the transaction, I will admit that it is transaction value when buyer and supplier are not related and price is the only sole consideration. This is the key underlying point for us to understand. So here it says transaction value is the quoted value on the face of the invoice. Supplier and recipient are not related. Price is the sole consideration. Please keep in mind whatever questions tested in your examination, once you get qualified, once you get into the practical world, this is something which you always need to keep in mind. Is the price sole consideration or is there any transaction, barter or exchange which is going to happen? Now, what is a related person? This slide and the next slide is going to explain to us who is a related person. Two persons are related if those persons are happening to be officers or directors in one another business. So director in company A, director in company B, A and B. When there is a transaction between A and B, These A and B are supposed to be related parties because they happen to be officer in one another business. Such persons are legally recognized partners in business. A and B are partners in A, B and Co. These people are presumed to be related parties when we talk about a transaction between A and B. Now, Schedule 1, Section 7, Schedule 1, no consideration. Now, that is one particular provision interlinked with this particular provision. If at all, if there is a transaction between related people, and that transaction between the related persons where there is no consideration, Section 15 comes into picture to say how we determine my transaction value. So time being, if there is a related party transaction, Section 15 subsection 1 is not applicable. We will say sorry, you does not fit into subsection 1 because it talks only about unrelated parties. Now further, who are related parties? Such persons are employer and employee. Very beautiful point of litigation, employer-employee. I'll spend a minute over here to say, if there is a transaction between employer and employee, sir, is there a transaction other than salary? Answer is yes. When I provide a canteen facility, my caterer as a company, when I pay to caterer, I pay per meal 50 rupees. In turn, I recover say 10 rupees from my employee. Transaction between employer and employee. If I recover 10 rupees, can the officer accept that value or can he question that particular value? So answer that moment is, when I adopt that 10 rupees, when I record 10 rupees, 15.1 is failed because transaction between employer and employee was defined to be a related party transaction. If 15.1 is a failure, we'll read further to understand what I have to do. Any person directly or indirectly owns, controls or holds 25% or more of the outstanding. Now this is more in relation to control, which is exercised by way of a shareholding pattern. If there is a transaction between these two people where 25% of the or more is held, then that is considered to be a related party transaction. Directly or indirectly control one of the business, both of them directly or indirectly controlled by a third person. Together, these two parties directly or indirectly control a third person. Members of the same family, fagent, one of them is the sole agent, sole distributor, all concessionaire or of the other. If this conditions are met, then all of them are considered to be a related party transaction. So friends, if you come across that situation where there is a transaction between any of these 9 members, then my section 15 subsection 1 transaction value is failed. What I have to do, I have to read further to understand what does my further provisions guide me how to go with my transaction value. This is a slide which was picked up from your institute material where it says my transaction value is admitted where supply is between unrelated persons and price is a sole consideration. As long as these two things are met, then I would say this is the transaction value for the purpose of section 15 subsection 1. Now, till now when we are talking about section 15 subsection 1, let me see if any questions are there quickly to answer. I can see that most of you have given answers in relation to examples and also in relation to cash transaction, credit transaction. Fairly, your understanding is good enough. I go with your reasoning, what you have mentioned. Good enough. I don't see any questions raised till now, till whatever we have discussed. Okay. Good. A couple of friends have given examples in relation to deposit like electricity, telephone deposit. Fairly good enough. I go with you, Manmohan, whatever you have mentioned. Yes. Okay. I presume that there are no doubts till now, whatever we have discussed. There is one question from Srinivas. A company wants to open a foreign branch, approached a chartered account in India to assist on the same. He agreed for the same and raised an invoice to the client for 10 lakhs. And he paid 5 lakhs to the foreign consultant, local CA in that country. He raised, point number 2, if he raised the invoice for 5 lakhs and he asked foreign consultant to raise the invoice for 5 lakh directly, please guide the GST implication in both the scenarios. Srinivas, I hold on to your question. Reason, we will read through further inclusion, exclusion, then I'll get back to your question. your question is valid. In case if I fail to answer your question, I request you to post back the same question. By oversight, if I skip your question, please post back to the same question. When I talk about 15 subsection 2, by and large, your question will be answered. Bear with me, Srinivas, for that. Now, coming back to my section 15, subsection 2. This is one section which is more relevant with one question what Srinivas has asked, and couple of questions are going to come further. 15 subsection 2 says that when you look into your transaction value, look, there are certain guidance given under subsection 2 which was supposed to be added back to your transaction value. What it says: any taxes, duties, cess, fee charged levied under any other law. They're not referring to this law, GST law. So if at all, if there is a tax, duty, cess, fee or charge, examples, I'll give a best example. Let me read further. Other than this act, SGST, UTGST and SGST, compensation to sets, if charged separately by the supplier. So they're saying that, look, when you talk about your transaction value, please keep in mind any tax, duty, cess, fee, etc. charged under any other law, please include that for the purpose of transaction value. This is the guidance given under 15.2 subsection A. I'll give an example. In fact, I have given one working note question. There also, I think I have covered this particular example. Say, I'm running a factory, assuming that ours is a private limited company, and we have a factory. Our factory is located 60 kilometers away from the city. To commute from city to the factory, I need to have transportation. There is one rule that whenever there is a commercial vehicle, this commercial vehicle has to have some road permit and license which has to be obtained for the purpose of carrying the passengers. I'll pick up an example which is peculiarly there in the state of Haryana. In this particular state, Haryana, when I move my vehicle, commercial vehicle from one state to another state, I need to pay something called passenger tax. For a moment, let me assume that my factory falls in the state of Haryana, say Gurgaon. I have employees to be picked up from Greater Noida, Delhi, then Uttar Pradesh, and in and around the presence of Gurgaon. So what I do, I travel, my vehicle goes to Delhi, goes to Uttar Pradesh, goes to Haryana, and somewhere around Gurgaon. So this transporter has to pay a tax once in 3 years, or say once in a year. Based on the fitness of the vehicle, based on the old condition of the vehicle, I pay a local tax. So there is a vehicle which is 13-seater capacity, a tempo traveler. I pay a tax of 50,000. When I charge that 50,000 to the company, to the private limited company, question comes here is, should I charge GST on that particular tax? The answer for that question is yes, because section 15 subsection 2 says any cess, any tax which was levied not under this law, any other law. I being a transporter, I have got into a contract with the company. Look, because of your obligation, I'm moving out of Haryana. Because of your obligation, when I move interstate, my authorities say I have to pay something called passenger tax. Because of you, I'm paying that tax. When I pay that tax, you're obligated to pay me back to as a consideration. Now, when I charge that particular thing, the question comes here. When I charge, say 12% on this transportation, rate of tax is 12%. On 50,000, when I bill back to the company, the question comes, should I charge GST? Answer for that question is yes. I need to charge GST at the rate of 12%. For the simple reason, my section 15 subsection 2 says that any tax paid not under this law, under any law, has to be considered for the purpose of my transaction value. Any of you have any doubts on this particular thing, please put the questions in your window. I'll answer that in a while. Moving on further, section 15 subsection 2 clause B, a crux of entire valuation. Example number 1, whatever we have discussed, and Srinivas, what question you have asked, that also is answered here. An amount, this says my inclusion, any amount that supplier is liable to pay. Supplier is liable to pay for what? In relation to such supply. In relation to such supply. But which has been incurred by the recipient of the supply. Instead of supplier incurring that expense was incurred by the recipient. They say, please include that for the purpose of valuation, and not included in the price actually paid or payable for the goods or services or both. So they say, as a supplier, when you are rendering a supply, please consider a value. That value which was paid by the recipient rather than supplier he himself paying for the supplier. I'll give an example. I am a chartered accountant. I have to give an opinion on tax exposure, company incorporation, tax exposure, double taxation treaty avoidance agreement, and also a couple of things on fund floating in India. So there is, I'm slightly fine tuning the example one of your friend has posted to me for brevity. So there was a query which has come to me from a foreign company saying that I need consultation on ROC matters, SEBI matters, your income tax related matters, your GST related matters, and couple of accounting provisions. Now when I look into all this, I'm expert in accounting, I'm expert in taxation, that is GST. I don't have income tax expertise, I'll go to Mr. X. I don't have ROC expertise, I'll go to Mr. Y. I don't have SEBI expertise, I'll go to Mr. Z. X, Y, Z. Now, when I'm giving an opinion, my client knows very well that I'm depending on X, depending on Y, depending on Z. My client who is there abroad, he says, Praveen, why don't you get the consolidated bill? I interact only through Praveen. Let X give his opinion, let Y give his opinion, let Z give his opinion. I'll get in touch with Praveen so that I'll have one point of contact. This is one set of example where when I'm charging, X is charging 5 lakhs to me, Y is charging 5 lakhs to me, Z is charging 5 lakhs to me. I, being a supplier, what I'm doing, I'm getting all those services, opinions, consolidate, put into my opinion, I charge it back to my client. 15 lakhs all XYZ, 10 lakhs pertain to my portion, 15 plus 10, 25 lakhs. I say 25 lakhs is a total wholesome value which I am going to charge to you. 15B says that, look, I'm going to accept your transaction value for the reason you being the supplier, you are liable to pay for whom XYZ. You have included that value in your value of supply. The same example to explain this provision B, slightly I'll alter this way. This gentleman who's residing in foreign nation, he says, Praveen, you bill 15 lakhs to me, but for my convenience, opinion of X, opinion of Y, opinion of Z, pull all those opinions together along with your opinion, make a handsome manual kind of thing for me, for my investors to explain. When investors ask me, I would say, look, this is Mr. XYZ firm professional in India. He has rendered his opinion, legal opinion. This is what I'm going to present to my investors. But for the convenience, what I will do, for X, I'll pay separately. For Y, I'll pay separately. For Z, I'll pay separately. Or I, being a service provider, I would say, because anyway, this XYZ is known to you, you kindly remit the remittances to them separately. That is the scenario where they are saying that, please consider all that money, because though recipient is paying to them separately, that shall form part of your transaction value for the purpose of charging GST. This is what my section 15 subsection 2 clause B talks about. Let me see if there are any questions which are raised in this regard. If not, we will continue further. Srinivas Reddy, please let me know if I have answered your question or not. Fairly, I have picked up your answer and your query, and I have answered. Any questions on 15 subsection 1 transaction value, subsection 2? Okay, no questions. So I'll continue back to our presentation. Now, so 15.2 fairly says that if there is a money which is spent, then let that be added back. Now, please note, I have underlined something called supplier is liable to pay for what? In relation to such supply. So in relation to such supply, if supply is liable to pay, but it was paid by the recipient, 15.2 says that bring it back and add in your transaction value if at all you have not considered for the purpose of valuation. When we go to the working notes, I'll also pick up one example what was there for us to get more clarity. Point number C. This point number C is more inclined to my first question. I was talking about auditor appointment. One of you have answered engagement letter. When I have given an engagement letter, was the engagement letter was given for 1,50,000 or 1,62,000? Or I guess you have given an answer that engagement letter should have been given for 1,62,000. Now, I'll read the provision. Let us go back to understand that example also. Clause C says that incidental expenses including, now you look at the language, including, it does not mean only those items which are included here should be included. My incidental expenses, when I say incidental, simple dictionary, Oxford dictionary says incidental, anything done in or in relation to the main course of activity. So if there is an incidental expenses incurred, like including commission and packaging. So if I am incurring any activity where I charge commission, when I charge something called packing charges, which is charged by the supplier, these expenses are charged by the supplier to the recipient of a supply, and any amount charged for anything done by the supplier in respect of supply of goods or services are both at the time or before the delivery of goods or services. This is what they are saying that. Please include all these elements in your value of supply. This is what we need to understand. Where it says incidental expenses have to be included. Incidental expenses to be incurred. If you have any doubts till now, please let me know. I'll answer that. To answer for query number 1, when we are talking about auditor appointment, should I charge GST on 15,000 or should I charge GST on 1,50,000 or 1,62,000? What would be your answer? 1,62,000, not 1,50,000. Yes. 1,62,000. Yes. 1,62,000. Yes. Yes. Someone has given even the breakup 29,000. Perfectly good. I go with you. Yes. All of your answers are correct. There is one question raised by Yogesh. Yes. I could see many answers coming on. 1,62,000 in the first example. What we have discussed. Audit is appointment. 1,50,000. 1,50,000 is your auditor fee. 12,000 whatever I spent. It is an incidental expenses in relation to supply. Then it forms part of my supply. There was one question from Yogesh. For 15.2b, if payment for not related to such supply and incurred by the recipient, whether includable? Yes, Yogesh, answer is yes. If any payment was, like if there is a non-related party and recipient has paid on behalf of the supplier, answer is yes, it has to be included. Now, please understand, only in relation to main supply. That is B, not for C. Yes. Ram, GST needs to be charged on commission. Yes. Answer is yes. I'll come back to my presentation slide. At this level, I'll slightly change my example. Please understand the question carefully. We have read 15.2 under subsection 2, B and C we have read. We need to bifurcate what is B, what is C, when I apply B, when I apply C. Understand my question and then answer your this answer to this question. I am an auditor. I have to travel from say Tamil Nadu to say my client is in Telangana, in Hyderabad. Say I have been appointed as an auditor. I have been appointed as an auditor for a company which is there in Telangana. In the process of my audit, I am supposed to travel from Tamil Nadu, say Chennai to Hyderabad. When I travel in relation to this particular audit, question to you, should I include that freight charges for the purpose of charging GST? My audit fee is 1 lakh. My travel cost is 20,000. Question to you. Should I include that 20,000 in my transaction value of 1 lakh? On 1 lakh 20, should I charge GST, or only on 1 lakh I have to charge GST? Please put your answer. When I have incurred 1 lakh as my audit fee and 20,000 as air freight charges, should I charge GST on 1 lakh? Should I charge GST on 1 lakh 20,000? Dilip, I'll come to your question little later. The question here is, when I have charged 1 lakh as audit fee and 20,000 I have incurred on transportation air freight charges, should I charge GST on entire 1 lakh 20 or only on 1 lakh? One lakh 20,000, 1 lakh 20,000. Okay. Now, 15 subsection 2b says that anything which was done by the recipient on behalf of the supplier. 15.2 says that incidental expenses. Fairly good. I could see answers. Yes. 1,20,000 should be included for the simple reason clause C says incidental expenses. Because I have incurred in relation to my main supply, I have to incur that particular 20,000. Now, before we go further, I'll slightly change my question. That air freight of 20,000, instead of me booking the tickets, my client has booked the tickets. He has arranged the tickets. I am an auditor. I just travel from Chennai to Hyderabad and I do my audit and I'll come back. That 20,000 which was paid, I don't get to know. My client has paid. The question comes here. Should I ask my client about how much you have paid for air charges, and should I ask get the 20,000 include on 1 lakh and charge on 1 lakh 20, or just charge only 1 lakh on that 18%? What would be your answer? Only 1 lakh. Okay. 1 lakh. Okay. Not on 20,000. Okay. It was incurred by client. Okay. Good. Fairly good enough. I could see the answer is that when I have rendered my services, incidental expenses if I have incurred, only then I have to charge. I have to include that in my bill and I have to charge. Incidental expenses I have not incurred, it was incurred by the client, then I'm not supposed to consider it for the purpose of value of supply. Now, there was one question from one of your friend. What is the difference between incidental and ancillary? There is not much difference. Both are conjunctive words. Incidental is a macro perspective. Ancillary is a subset of incidental. Ancillary, any of the expenses incurred in relation to, which is not directly related, but it is for the purpose of that particular supply. Ancillary also I can say, like purchase of nut and bolt, purchase of consumables. These are all ancillary expenses. May not be incidental, ancillary expenses. Even without that ancillary expenses, my supply can happen. But incidental expenses invariably I have incurred in relation to that project. Ancillary, I would say, it is a subset. Incidental is a superset. So incidental includes this subset called ancillary. Even without that ancillary expense, supply can take place. Incidental, I have incurred in relation to that particular supply. That is how I need to understand. Coming back, point number D, it says any interest or late fee or penalty for delayed payment of any consideration for any supply. It says when you talk about your transaction value, if at all, if there is an interest, if there is a late fee, if there is a penalty, I repeat, any of these elements which are compensating in nature, which are financial transactions, which are finance charges kind of thing, if I recover anything from my customer, please include for the purpose of valuation. That is what this particular provision says. I'll give an example. On an invoice I have raised, I have mentioned the value of supply is 1 lakh. The value of supply is 1 lakh. But this value of supply of 1 lakh, the credit period is 30 days. If you don't pay me within a period of 30 days, interest is chargeable at the rate of 24%. Simple interest at the rate of 24%. So if I get money after a period of 6 months, along with 1 lakh, assuming I get a consideration of interest of around say 12,000. That 12,000 shall also form part of supply. That is what this particular provision says. So, if I receive 1 lakh, if I also receive 24,000 as a consideration, this provision says value of supply, please charge GST on entire 24,000. Sir, on 1 lakh, I have charged 28%. On this 24%, you are saying finance charges. Should I charge 12%? Should I charge 18%? Should I charge 24%? Should I charge 5%? Or there is an exemption notification for your section notification 12 of 2007 financing activity. There is an exemption. Okay, shall I abstain from charging GST? Section 15, subsection 2, clause D says that this recovery shall form part of consideration of the main supply. Look at the term consideration for any supply. Whatever supply I have done, that supply, what is the rate applicable? If the goods supplied is taxable at the rate of 12%, this recovery of 20,000, I have to charge 12%. If the main supply goods is 28%, then I have to charge 28%. What if, sir, my goods are, if I look into tax invoice, 12% is there, 18% is there, 28% is there. So when I receive 20,000, how do I charge? Proportionately. I have to allocate among the various transaction value. As per those rates, I have to charge the respective GST. That is what I have to do. This is what my section 15, subsection D talks about. Clause number E. Subsidies directly linked to the price, excluding subsidies provided by central government, state government. This we have discussed by virtue of an example, midday meal scheme or a food provision which is given by any of the state authorities. It says that please include a subsidy, but however, exclude a subsidy given by state government, central government. Question comes here. Sir, you're saying exclude subsidy given by central government, state government. What else subsidy is there? Now, a subsidy need not be given only by state government, central government. A subsidy can also be given by a private party, could be given by a public listed entity. Take an example. If Hindustan Aeronautic Limited says that whichever student takes an admission in a school which is run by this particular board, if a student comes from an employee working in HAL, the nominal fee of student instead of per month 100 rupees, please collect 50 rupees. The balance 50 rupees I will pay, the company HA will pay directly to that particular entity. So in that case, that 50 rupees is a subsidy. So when you raise a bill of 100 rupees, education, right now it is not taxable. Let's take another example. Instead of education, say there is a textile department. Any employee from HAL goes to buy a shop from clothes from a particular shop. They say, if the product value is 1,000, please recover 80%, balance 20% we will pay. That is called a subsidy. So subsidy can be given by a private party also. Here, this particular clause says that please include subsidy leaving state government or central government. That is what we need to understand. Now, 15 subsection 3. Before we go with subsection 3, let me know if you have any doubts on 15 subsection 1, 15 subsection 2. If you have any specific doubts, I'll cover quickly. Then we'll go to our subsection 3. There's one question from Dilip. He says, the 20,000 you have not recovered from Hyderabad client in your previous example. Perfectly, yes. Because I have not recovered. See, for me, audit has to be conducted. Travel was arranged from the client. So when client has incurred that expense, it is not an incidental expenses borne by me. So I wouldn't consider for the purpose of valuation. 15(2)(c) not incurred by me. So I'll keep away from my valuation. Further, there is one more question from Dilip. In a sale made for rupees 1 lakh, if payment made within 30 days, no interest is charged. Beyond 30 days, there is an overdraft interest. Same is charged from the buyer. Whether this interest is liable for GST, actually, if it is just reimbursement. Now, please refer to clause D. Dilip, please refer to clause D, which says that any late fee, interest, penalty, or any delayed payment, any consideration related to a particular supply, if I have recovered as per clause D, yes, it is to be included for the purpose of value of supply. Though you call reimbursement, my value of supply says it has to be included, so there is no escape from that. Sorry, I think I have skipped one question. Deepika has raised one question. If a supplier raises a bill of supply, exempted goods, for rupees 10 lakh and includes transport charges 8,000, then in this case, is GST to be charged on transportation charges? A very good question, Deepika. Very fantastic question, which is set in relation to valuation. I'll explain that question, Deepika. Thanks for raising that question. I would say worth reading this question once again. Deepika has raised one question. What she says, if a supplier raises a bill of supply, when we look at this term bill of supply, why? Because it is an exempted goods. So in this transaction, a bill of supply is issued for 10 lakhs and transportation charges charged for 8,000. 10 lakhs is the value of the material, 8,000 is transportation charges. In this case, is GST to be paid on the transportation charges? My answer for this, Deepika, I would look into this way. Section 15 talks about value of taxable supply. I repeat. Section 15, if you look at the heading, it says value of taxable supply. Now here, are we dealing with taxable supply or are we dealing with exempted goods, that is non-taxable supply? To answer that question, I travel back to section 8. If you have the material with you, all of you, if you have your material, please look into this term called composite supply, mixed supply. Section 8 talks about tax liability on composite and mixed supply. When you look into that section 8, here the transaction which has taken place, is it a transaction for supply of goods or transportation? If I look into it this as a composite supply or a mixed supply. Now, goods and freight charges, unless I pay a freight, delivery of goods, traveling of goods may not take place, may not happen. I apply my section 8 and I would say it is a composite supply, not a mixed supply, and it is a composite supply for supply of goods. So the key ingredient here, it is not the service element, it is the supply of goods. When I say composite supply, in the composite supply, what is my outcome? Supply of goods. The question, supply of goods, taxable, exempted, exempted. The moment I say it is exempted, I come to section 15 and say, sorry, I don't read my section 15. It is not for exempted goods. It is only for taxable goods. By virtue of reading that, I wouldn't charge GST on the transportation charges. This is my answer to your question, Deepika. Hope I have answered your question. Really, it is a fantastic question, Deepika. Apart from that, I don't see any other questions. I'll come back to my discussion on value of supply. Yeah. Coming to point number 3. This is another hard-bone discussion debate which is happening in trade and industry. 15 subsection 3. My value of supply not to include any discount. Discount. What is a discount? in common parlance, in general parlance, discount is a reduction in consideration. Discount is a offer in price what I have charged. So the moment I say discount, section 3, subsection 3 says value shall not include a discount when clause A. Discount, when this discount, it says before or at the time of supply. Discount before the supply or at the time of supply. Frankly, before the supply cannot happen. It is at the time of supply. At the time of supply, if such discount has been duly recorded in the invoice. So whatever tax invoice I am issuing, in the tax invoice, discount is shown, issued in respect of such supply. Now at this moment, please understand there are two kind of discount. Primary discount, secondary discount. Primary discount, secondary discount. If you have your working note, please make a note of this carefully. Primary discount is a discount which is exchanged, which is written on the face of the invoice. That is my primary discount. Secondary discount, a discount which is offered, which is not printed on the face of the invoice at the time of supply. When I say this value of supply, value of goods is 1 lakh, less discount of 5%, that is 5,000. The taxable value 95,000. On that I charge 18%. The discount which is printed on the face of the invoice, the discount which is printed on the face of the invoice, that is called as primary discount. In the GST law, when we talk, there are two kind of discount, primary, secondary. So the discount which is printed on the face of the invoice, I call that as a primary discount, and that it says please exclude. So when you are doing your valuation, exclude your primary discount and the balance amount you charge GST. Second, they are now talking about your secondary discount. After the supply has been effected, this section 15 subsection 3 says if there is a discount, that is secondary discount, after the supply has been effected, you can discount, you can reduce from your value of supply when if such discount is established in terms of an agreement entered into at or before the time of such supply and specifically linked to the relevant invoices. Now I'll spend little time here to make you understand. They're talking about secondary discount. The primary discount I have understood. A primary discount is a discount which is printed on the face of the invoice. I call that as a primary discount because anyway I have given a discount. I'll reduce that from value of supply and I charge GST. Now we are talking about secondary discount. That means I have supplied the goods, I have sold the goods. After selling the goods, I am willing to give further discount. When I am willing to give further discount, section 15 says, please exclude that from value of supply. Please exclude that from value of supply. The moment I exclude from value of supply, what will happen? The GST what I'm ought to pay, the GST what I'm ought to pay gets reduced. If you have your working note, please make a note. Please open your working note, make a note. Value of supply 1 lakh. GST 18%, 18,000, 1 lakh 18,000. I repeat. Value of supply 1 lakh. 1 lakh. On that GST at the rate of 18%, 18,000. Total value 1 lakh 18,000. Now, this gentleman says, look, I'll give you 2% cash discount if money is paid within a period of 30 days. This gentleman says, on the face of the invoice it is written, 2% cash discount if money is paid within a period of 30 days. Now question comes here for you. When I say 2% discount, is this 2% applicable on 1 lakh? Is this 2% applicable on 1 lakh 18,000? Question to you. Reason practically when you get into the examination, when you get into the corporate world, when you are vetting the contracts, when you are designing the contracts, you are giving a discount, you should be very, very careful. So when I say 2% discount, is it on 1 lakh? Is it on 1 lakh 18,000? Please answer to the question. So when I say 2%, what is the value of 2%? $2,000. Yes, yes, 2000. Okay. So more, all of you have given that 2000 is the value of discount which is being offered. Always discount is on the price of the product. Discount has nothing to do. Discount has nothing to do with your taxation. Please understand that whenever we talk about discount, I always talk about discount in relation to my product value only. Now, question comes here. When I say discount is given at 2% and GST, what happened to GST? Now, this section says 15.3 says that you can give a discount of 18%. Now, how much is the GST I am going to reduce? 18,000 is the GST I am going to charge. Now, this customer comes back and says, customer comes back and says, sir, I am going to pay you within 30 days. Within 7 days, he has paid the money. Now I have to give you a discount of 2000. Answer. GST is applicable 18% on 2000. So 360. Now, should I pay to the government? Should I pay to the government 18,000 or should I pay to the government 18,000 minus 360? That is 17,640. What would be our answer? When I gave a discount of 2000, should I pay to the government 18,000 tax or should I pay to the government 17,640? What would be your answer? Eighteen thousand, 17,640. Good. Now, good. Please understand. I'll come back to the provision. Now, see, what does the provision say? Discount is established in terms of agreement, then that discount shall be out of my value of supply. When I say value out of supply, my value is 1 lakh. From 1 lakh, I am taking out 2,000. Once I take out 2,000, I have been left with 98,000. On 98,000, please take your calculator, apply 18%. What is the value you are going to get? 18,000 on that 98%. 18,000 on that 98%. What is the value you get? 17,640. Yes. So as per my section 15 subsection 3, it says if the value of supply, I'm going to have a secondary discount, please give the benefit of secondary discount, and they say pay the tax of the discounted value. So I'm going to pay only that 17,640 to government and not 18,000. This is what the provision says. Moving further, it says input tax credit as attributable to the discount on the basis of the document issued by the supplier has been reversed by the recipient. Now look, nothing comes free of cost. The moment government says, I'm going to give you a relaxation on that 2,360 rupees, I'm going to give you a relaxation. Baba, look, you as a supplier, you're reducing the 360. Now, from the government perspective, on that 2,360 rupees was enjoyed by your customer. Have you ensured, you being a supplier, have you ensured the input tax attributable to the discount on the basis of the document issued by the supplier has been reversed by the recipient? How do you ensure that your customer has reversed the input tax? This is what the provision says. So to give you a benefit, you have to ensure that discount ITC, input tax credit, was reduced by your buyer, your customer. For that reason, credit note, debit note. Once I issue a credit note as a supplier, I expect a debit note back from my customer to say reciprocating mechanism. You reduce your output tax, I have reduced my input tax. There is a handshake mechanism. Further, subrule 4, where the value of supply of goods or supply cannot be determined under 15 subsection 1, it says, subsection 4 says, look, it is not possible to determine transaction value under 1. You go with your such manner as may be prescribed. That is your valuation rules. Why I have to go to valuation rule? Price is not the sole consideration. Why? Example of Pinky. When there is monetary consideration in another form, not solely in price, my 15.1 is a failure. I'll go to valuation rules. For the supplier and recipient, if both of the parties are related, I'll set aside my 15.1. I'll go to my valuation rules. So these are the two grounds why 15.1 is going to be set aside. Further, we move on to 15.5 where it says, this is the ancillary provision where it says government is in a position to formulate rules when there is a mechanism to be adopted for government can formulate rules for defining set of goods and set of services where my valuation mechanism under section 15 subsection 1 15 subsection 2 cannot be established. That is a point in time where my section 15.5 comes and say government has an authority on the recommendations of the GST Council to set the guidance. Now, I'll move on to valuation rules. Till now, 15.1 talks about transaction value. 15.2 talks about what needs to be included. 15.3 talks when a discount needs to be excluded. 15.4 says, look, when there is a failure of 15.1, then straight away go to your valuation rules. 15.5 says, look, government has an authority. As per the directions of the government, you follow into 15.5. Now, valuation rules, when we look into chapter 4 of the CGST rules, talks about determination of value of supply. Right now, we are going to talk rule 27 till rule 35. As of today, for your syllabus, there are total 11 rules which have been formulated. Out of this rule, Kerala Fund, cess fund is one rule which was newly inserted because of this natural disaster which took place in Kerala. Probably that is one amendment which is expected. You are taking up exam in November. All amendments which have taken place till April 2020 are going to get covered. So wait and watch for this Kerala Fund cess which is going to be get covered under Rule 32A. Further, rules to be applied in a order of their numbering. Rule 27, 28, 29, 30, 31, 32. In their hierarchy, what was laid out, that have to go with. And further, government has an authority to notify rules whenever they want to do so. First, I'll start with my Rule 27. Rule 27. Now, why we have come to rules? My valuation, whatever I have discussed, have failed. Because there is a failure in valuation, I have come to the valuation rules. First rule, Rule 27. What? Okay, I have given an example so that we will understand about this Rule 27 in a better manner. Exchange of old mixer grinder for rupees 3,500 for a purchase of new one whose market value is 20,000. Cash is paid only for 16,500. Now, why I have come to valuation rules? Price is not the sole consideration. When price is not the sole consideration, I am coming to valuation Rule 27. Another example, manufacturer of a battery decides the value of old used battery before the new one is supplied. Like usually when I buy a battery, old one, there is exchange, barter. I take your old battery, I give my new battery. So first example, there is exchange for a market value which is available. Example number 2, where there is a barter transaction. Both these transactions, where there is an exchange, where there is a barter, my Rule 27 comes into picture. Rule 27 says that consideration is not wholly in money. When consideration is not wholly in money, what it says, supply of goods or services is for consideration not wholly in money. The value of supply shall be open market value of such supply. Like we were talking about an example. When I buy this television, what is your open market value? Mixie grinder. We're talking about mixie grinder whose value is 20,000. If you know what is the open market value, that shall be your transaction value, where open market value is available. If the open market value is not available under A, that is as per above, the sum total of consideration money and any other amount in money. The example what we are talking in this first example, market value is 20,000. If available, straight away I'll go with the market value of 20,000. If market value is not available, what I will do? The invoice price is 16,500. The exchange value 3,500. Both put together, I derive under Rule 27. This is my transaction value. So if there is an open market value, go with that open market value. If there is no open market value, what is in cash? To that add something which is in monetary. Like example of Pinky's case. Pinky went to the jewelry shop to buy a ring. The cost of ring is 25,000. I have collected cash of 22,000. Rule 27 says that cash consideration, sum total of consideration money 22,000 and such further amount in money plus that old ring 3,000, both put together 25,000. This is what Rule 27 says. Further it says, if open market value is not available, the value of that ring 3000 is also not available. What it says, if the value of supply is not determined A or B, the value of supply of goods and services are both of like kind and quality. The ring which you have sold, similar quality, similar kind, what is the value? That shall be your transaction value. So when I take that example of a ring, what is the kind and quality? 22 carats, 24 carats, 18 carats. Based on the quality and based on the kind, I'll say this has got so much of weightage. This is of so much of purity, and this has got a diamond studded ring or a stone which is having a market value of so much. Based on those factors, I determine a value under Rule 27. If none of these are available, I straight away travel into my Rule 30. Rule 30 and Rule 31. It says if open market value is there, go for it. If open market value is not there, cash plus exchange value or barter value. If these two are not available, like kind and quality. If these three are not possible, go for Rule 30. What is Rule 30? Cost of goods sold plus 10%. Rule 31, best judgment assessment. Rule 30, Rule 31, time being, please understand, it is a residual valuation mechanism. We will discuss in detail when we travel to Rule 30 and Rule 31. As of now, when I say Rule 30, it is nothing but COGS plus 10%. Cost of rendering the service plus 10%. So I use my costing techniques. I prepare my cost sheet, and what is COGS? To that load 10%, that is going to be my value under Rule 30. Rule 31, best judgment mechanism. Next. Under this Rule 27, whenever we talk about open market value, this open market value is nothing but, this is a full value of money excluding taxes and GST payable by a person to obtain such supply at the time when supply being made, provided such supply is between unrelated persons. That means to say, when I want to buy a telephone, when I want to buy a television, when I want to buy a mixie grinder, what is the open market value for that commodity? That value between two unrelated parties, which is open for purchase, that is called open market value, which is a definition available. Like kind, like quality, where on the basis of characteristics like what is the quality, what is the quantity, what is the functionality. LCD TV, LED TV. If it is LED TV, compare with LED TV. If it is LCD TV, compare with the other LCD TV. Take example, Onida. I don't know what is the market value. If I don't know, compare Onida with Samsung. Compare Onida with say other brand. That is how you do a comparison on the basis of like kind, like quality. This is one slide which I have picked up from your institute material. When I read my Rule 27, in simple terms, start with open market value. If that is not possible, what is the value in cash plus what is the exchange or barter value? If that also fails, go with your the like kind, like quality. Even that is a failure, I'll travel to Rule 30, where 110% of COGS. This examples I have discussed in a different fashion. I'll skip this example for a moment. Rule 28. Now this is one important rule. Rule 20 is one important rule which most of you will come across when you get into corporate world. When there is a distinct person transaction. Let me just take if any questions are there. Okay. There is one question in relation to discount by from one of your friend, Dilip. If a supplier says, if you achieve a sale target of 10 lakhs, then I'll give you 10% discount. How will deal on the last invoice? Now answer to your question, Dilip. See, the 10% is a documented transaction on the day when the sale is taking place. Either before the sale or on the date of sale, there is a clear understanding between supplier and buyer. you achieve this many target of sale, I'll give you so much of annual discount, turnover discount, annual discount, seasonal discount. There are targets set which are documented, which are available prior to the date of invoice. Then yes, that I can exclude from the value of supply. Couple of examples I'll take in detail. Dilip, end of the session, if we have time, I'll discuss a couple of examples in detail also with practical issues. If I have not covered, please let me know once again on that. Coming back to my Rule 28, Rule 28, I have given couple of examples. ABC Limited has made manufacturing plant in Tamil Nadu. Supply of the goods undertaken from Tamil Nadu to Kerala, Haryana, Maharashtra, that is to various customers. From Tamil Nadu to independent customer, the value is 28,000. And if it is a stock transfer, I charge only 14,000. Now understand, if I sell to a outside customer, 28,000 is the price. If I sell to my stock transfer, if there is a stock transfer, I charge GST on 14,000. Question comes here, value of supply, related party transaction, distinct person. Because it is a distinct person, my section 15 subsection 1 does not get accepted. I'll come into Rule 28. Under Rule 28, I'm just talking only about a distinct person. What is a distinct person? Stock transfer, branch transfer. One company having a same PAN, if I have been registered, if I have been located in various states, I obtain a registration under various states by virtue of section 25, I will be called as distinct person. Head office in Tamil Nadu, branch office in Hyderabad, branch office in Haryana, branch office in Pune, branch office in say Jammu and Kashmir or Dehradun. Now these are the branches which will be considered as distinct person. Write down distinct person. Section 25 deals with this distinct person. One state, again when we deal with registration, you'll have a clarity. If I'm registered under one state, by virtue of this section 25, section 22 read with section 25, all other states ought to be registered. For that distinct person, Rule 28 is relevant for us to discuss. What it says. The value of supply of goods and services are between distinct persons specified under section 25, where supplier and recipient are related, other than the supply who's made through an agent. Here, Rule 28, they're not talking about principal agent, they're just focusing on your distinct person. B, the open market value of such supply. So if there is a transaction between two distinct persons, they say it will be open market value. It is very, very easy to establish this open market value for the simple reason, I transfer from one branch to another branch, that is a related party transaction, will not be accepted. I sell those goods to an independent party, same goods, then that will be an open market value. That will be considered as my value for the purpose of GST law. So it says either it can be an open market value. If the open market value is not available, the value of supply of goods of like kind quality. If the open market value is not available, like kind and quality. Why it is not available? I transferred from say Haryana to Delhi. There is a branch in Delhi, there is a branch in Haryana. From Haryana, I have transferred a product. Like say there are different manufacturing plants. In Haryana, 25% manufacturing process over. From Haryana, it goes to Delhi. There is a further process valuation. 25% becomes say 45%. From Delhi, I transfer to Uttar Pradesh. In Uttar Pradesh, from 45%, the valuation happens to 60%. From Uttar Pradesh, it comes to Pune. In Pune, the value becomes 80%. From Pune, it reaches all the way to Chennai, where the valuation becomes 100%. Now, when it is moving from one branch to another branch, open market value is definitely not possible. In that case, they're saying that when open market value is not available, like kind and quality. Again, in this scenario, like kind quality is nothing but the value what I have adopted. So that goes as my transaction value. Now, further, in clause 6 is you don't have open market value, you don't have like kind and quality. Then it says, I'll go with Rule 30, Rule 31. Precisely, it is nothing but COGS plus 10%. Keep in back of memory, whenever you're talking about distinct persons, always see your client's financials. What is your inter-unit transactions? Is it at 100%? Is it at 110% of the COGS? If it is at 110%, you are in compliance with the law. We'll read two provision, then you will have a clarity. Provision number 1, it says, provided where goods are intended for further supply as such. So when I transfer from one unit to another unit, one branch to another branch, when stock transfer happens, take example of Bata showroom. Bata showroom, I manufacture chappal in one factory. Once a chappal is manufactured, I move from one unit to another, one branch to another branch. I don't do any valuation. I just sell that chappal as it is. Now that is the case what they are talking, where goods are intended for further supply as such by the recipient. There is no valuation. The chappal which has come at 8 size, I'll sell it 8 size. I cannot cut the chappal, I cannot add anything, I don't do any validation. I just sell as it is to the customer. In that case, what they say, at the option, the option there is a given to the supplier. B, amount equivalent to 90% of the price charged by for the supply of like kind quality by the recipient to his customer. So they're selling from Bangalore, you transferred material worth 100 rupees to Chennai. In Chennai, you sell the same chappal of 100 rupees at a price of 150. From Bangalore, I have transferred chappal for rupees of 100 to Chennai. Chennai, you are selling the same chappal to a customer at 150. What here they say? 90% of 150 shall be my transaction value. That means to say, because it is my stock transfers, I should know the end value from the branch. What is the end value at branch? 90% of that can be adopted. Little cumbersome. But this is the provision which was there under the GST law. Now, this second provision is the beauty which takes away entire complexity. This second provision takes away entire complexity. Please read carefully. Provided further, recipient is eligible for full input tax credit, the value declared the invoice shall be deemed to the open market value of goods or services. This rule 28, it says, when you do stock transfer, one unit to another unit, I don't break my head. I'll say the bill value is transaction value as long as the other unit which is buying the material, the other unit receiving end, whoever is buying the material, is in a position to take input tax credit. Read the language, where recipient is eligible for full input tax credit. So if your recipient is entitled for full input tax credit, now we need to wait for section 16 which talks about your input tax credit. Till such moment, please understand, if your recipient can take input tax credit, answer is yes. You can consider the invoice value as the open market value. Officer does not have a right to question your invoice value. That is the point here. I'll take quickly one question from Hannah. Regarding continuous supply taken in the last class, both successive payments and statements are present. Then does the successive statements take over payments? No, Anna. When there are successive statements in payments, I go with successive statements. Whichever occurs prior, whichever comes in the hierarchy. If the payment is as good as an advance, you're talking about continuous supply. Continuous supply for services, taxable. Continuous supply for goods, exempted. Notification 66 of 2017. If payment comes earlier, taxable in case of service. If payment comes in case of goods, wait for the successive statement. So that is how we treat with my continuous supply of goods or services. Moving on further, I'll come back to my slide number provision 28. This provision, rule 28 says that if the recipient is in a position to enjoy input tax credit, please consider the invoice value as your transaction value. No more questions, no more arguments. This mechanism of 90% is not at all applicable. So indirectly 90% is applicable when recipient is not eligible for input tax credit. Why so? Wait for section 16 to cover, then you'll have a clarity. Now this section 32 again, I'll cover in detail little later. I'll come back to this rule 28. Now rule 29 talks about your agent, principal to agent transaction. So here again, as usual, all the rules, starting point, open market value. So when there is a transaction between principal and agent, what they're saying, with the open market value of the goods supplied. That is, what is the open market value? That I'll consider. 100% principal to agent, there will not be a disclosure of cost. What is my selling price to the end customer? That shall be the price adopted by the principal to the agent. So we will not have valuation issues whenever there's a principal to agent transaction, for the reason when you have read your accounting for your computation of commission, your what you call consignment accounting. In that chapter, I would have studied how do I calculate my commission, what is a bill creditor commission. All those transactions we will discuss in relation to principal agent. So here they say in valuation, first I'll go with your open market value. That is option number 1. Or option number 2, what is that? At the option of the supplier, 90% of the price charged for the supply of goods of like kind and quality by the recipient to his customer, not being a related person, where goods are intended for further supply. So if at all goods are supplied by the agent to end customer, that end price, whatever is there, 90% of that price charge shall be adopted by the principal. That is what they are trying to talk in your rule number 29. This is one example. In slides, whatever examples we have taken, a couple of examples are akin to your institute material. Institute material examples are picked up straight away from Bayer Act for the simple reason, whenever we read a law, whenever we read a Bayer Act, in the Bayer Act, whatever examples are set, we have to go with the same examples in the same fashion of understanding. A simple example, you would have studied your law paper, go back to your Contract Act, refer to section 32, refer to section 56. When we talk about section 56 and the Contract Act, there is a reference to something called doing of an impossible act. Recently, after pandemic has come into picture, we were referring to a contract where we will see, was there any contractual obligation for getting away with the contractual obligation to do away my rights of performance. That reason, these examples are picked up from your Bayer Act as it is. So this is one example in relation to principal agent. I'll skip this for want of time. Next, they say, where the value of supply is not determined, that is clause A, open market value is not available, then as usual I'll go for rule 30, that is 110%, or rule 31, best judge assessment. So first look at open market value available, go with that. If not, 90% of the price charged for the similar like kind in quality by the recipient to his unrelated customer. Whatever agent is selling to the customer, that price multiplied by 90% shall be my transaction value. This is all discussed in my rule 29. Next we move on to rule 30. Rule 30, as I say, COGS plus 10%. Value of supply of goods and services are both not determined by any of the preceding 27, 28, 29. I'll come to rule 30, where the value shall be 110% of the cost of production or manufacture or cost of acquisition of such goods or cost of provision of such service. So here our costing techniques are required. When I refer to erstwhile central excise provisions, central excise, there is section 4 which deals with your transaction value, where they also refer to 4A which deals with your deemed supply. 4 read with 4A, they always refer to a valuation. Whenever there is a related party transaction, they say the cost of goods sold plus 10% shall be the value for the purpose of valuation. That central excise provision was picked up and put into GST law as it is. When there is a failure of 27, 28, 29, I'll come to your COGS plus 10%. That shall be my transaction value. In relation to services, provision of services plus 10%. You being a professional, you being a chartered accountant, there is a utmost value when it comes to valuation where there is a related party transactions. So when we look into your audit from audit perspective, it is not just doing the audit from revenue recognition, AS9 complaints, whether the contract says the goods have been supplied, FOR, X works, etc. One step beyond that, related party transactions. When we deal with your notes to accounts, when we present that these are the related party transactions, when we talk about related party transactions, for those transactions, what does my section 15 read with rule 27, rule 28 says, and whether I have complied for those related party transactions, purchase and sale transactions. That is something which we need to keep in mind. Coming to rule 31, it is best judgment assessment. This rule 31, by and large, Only commissioner gives the instruction for the purpose of adopting Rule 31. Reason. All the provisions under Section 15, all the provisions which are there under Rule 27, 28, 29 have failed. Rule 30, they will override and they'll come to Rule 31. When we read this, it says, the value of supply of goods and services both cannot be determined under 27 to 30. The same shall be determined using reasonable means consistent with the principle laid out under Section 15. Now, it so happens, Rule 30, when we adopt COGS 10 plus 10%, because of the complexity in the nature of business, I'll give an example. When we think about pharmaceutical industry, there is one division called R&D department. By and large, it so happens that they have different GST number for R&D department, different GST number for the regular manufacturing, different GST number for the procurement division for its operational use. When we talk about R&D, this is one particular area where always when audit has to be done, special circumstances, at the instruction of a commissioner, a chartered accountant or a cost accountant will be appointed for the purpose of valuation. Keep in mind, this industry where it is not easy, it is not possible for determining the value because of the complexity in the nature of business, I get into Rule 31, which is called best judgment, where my principles laid down under Section 15, what it says, look at the value, transaction value. Inclusion, have you added these things? Exclusion, have you eliminated discount? Then derive something called value of supply. Second example where we apply Rule 31 is your heavy industry. There is one company called KPC, which is into heavy manufacturing industry. Big machines are manufactured in this particular industry. A project which is having minimum value of 50 crores on odd. When they get a customer order from a customer, when they execute the transactions, especially when there's a related party transactions, there's one company called KPC Sugars. There's one company called KPC Engineering. KPC Sugars, which is into sugar manufacturing, they procure a heavy machinery from KPC Engineering. When I manufacture a machinery and I supply to a related party, this is important for us to understand. How do I go? Have I complied with Rule 30? Have I complied with Rule 31? Is there a mechanism I can go with Rule 28 where I cannot travel to Rule 30, Rule 31? Recipient is in a position to enjoy input tax credit. For some reason, the sugar which is manufactured is supplied in turn to a government entity. Some reason there is no benefit of output tax collected. So input tax, there is a restriction. Forcibly, I'll come to Rule 30 and Rule 31. So you as a professional, when we read these provisions, there is something for us to understand what business scenario we need to accept this transaction value. We need to set aside and go to Rule 30 or Rule 31. This is what in there for us to understand. Coming back, Rule 31. In case of supply of services, supplier may opt for this rule ignoring Rule 30. In case of services, straight away instead of going to Rule 30, I come into Rule 31. Best judgment assessment. Based on best judgment assessment, I get a professional certificate. A chartered accountant is going to certify based on the facts, based on the incidents and events explained to us, based on the contractual obligations. This is a value derived under Rule 31. This is what we need to understand. Next, Rule 31A. Now, this Rule 31A is something which we have to discuss from Section 15 subsection 4. If you look into your 15 subsection 4, it says the value cannot be determined under subsection 1. We need to travel to the rules. Here, for each and every transaction, these rules define how do we find a value of supply. First example, lottery, betting, gambling, horse race. In relation to this, they say my value of supply shall be, let me come back. Yeah. My value of supply lottery shall be 100 by 128 of the face value of the ticket. So if I sell a lottery ticket of 100 rupees, what I will do? 100 into 100 divided by 128. I'll get what is my taxable value. On the taxable value, I'll apply 28%. All these activities are sin goods where rate of tax is 28%. Lottery, betting, gambling, horse racing, all of these activities, the rate of tax is higher. So when I look into the lottery, what is the face value of lottery, or the value fixed as per notified as per the state. So as per the notified value of the state or the face value of the lottery. If I buy a lottery ticket of 1000 into 100 divided by 128, I'll get the face value. On that 28% is my GST charge. This is in relation to your lottery ticket. In relation to actionable claim, that is your betting or gambling, where I just toss a die and I get a win of gambling activity. In the form of chance to win in betting or gambling, or in a horse race in a race club, the value of supply shall be 100% of the face value. When you get into this gambling house, you have this betting schemes. You say 10,000 I bet. If the die falls on this number 12, 10,000 is my bet. 5 times of 10,000, 50,000 I get. So when you get into this activity of gambling, the transaction value shall be 100% of the face value. So on 10,000, 18% is GST, or say 28% is GST. That is my transaction value. This is how they define my transaction value. Now we move on to rule 32. One question. Seldom when we talk about valuation, this is 5 subset. Out of these 5 subset, one question can be expected from your examination perspective. This rule 32 talks about 5 activities. First activity, purchase or sale of foreign currency. Second activity, booking of tickets by a travel agent. Third, life insurance. Fourth, value redeemable in terms of vouchers. Fifth, value of second-hand goods. Now, I wouldn't say 1 or 2 is a pet question for the examiner. All these five are one of the questions which are very frequently set in your examination. Not that it is complicated. There's lot of practice revolving around this particular 5 aspects. First, I'll come to foreign currency. First aspect, I'll come into my foreign currency. Value of supply in relation to foreign currency. I'll explain the provision instead of reading. This is just a mathematical equation. I'll explain you the background. How does this particular provision, how does this particular valuation works? That also I'll explain. This particular foreign currency, you take example of any of this buying and selling agent. We call AD, authorized dealer. Say one of employee is traveling to, say, Japan for the purpose of official business trip. For the purpose of business trip, he needs to have 1 lakh rupees of INR converted into Japanese yen. What I'll do, I'll go to the authorized dealer. I'll say, look, 1 lakh rupees is this. Please give me equivalent value of Japanese yen. Now, what happens here? This authorized dealer or this agent who is authorized to convert the money into foreign currency. One of the entity, I'll take a name called United Exchange, UAE. There's one agency called UAE, United American Exchange, which deals with this foreign currency, who was an authorized dealer. So when I go to this authorized dealer, I'll pay 1 lakh. He'll say, I'll convert as per the current RBI rate, and when I convert for 1 lakh rupees, you'll get, say, 1,70,000 Japanese yen. Means my INR is higher than Japanese yen. So 1 lakh, I'll get 1,70,000 Japanese yen. For doing this conversion, he says, my commission is on so and so thing. On this, I'll be charging my commission. Here they say, my value of supply shall be the difference in buying rate and selling rate. This authorized dealer, he purchases, say, at 42 rupees. Like when I talk dollar, it will be easy for you. 100 rupees is equivalent to, say, 75 rupees. Sorry, $1. $1 is equivalent to 100 rupees. Sorry, 75 rupees. So if I pay 75 rupees, I'll get $1. Authorized dealer, what he will do? He'll buy at 75. He'll sell it to you at 76. The difference of these two is nothing but the number of money that multiplied by the number of units is your value of supply. So difference between buying rate and selling rate. Simple equation. what rate I have purchased, what rate I am selling. When I am a dealer, when I am an authorized dealer, definitely I have to keep a markup. How do I do? I buy, like for 1 lakh, I'll say buy for 75,000. I sell it for 80,000. So 80,000 minus 75,000, the difference of these two, 5,000 is my margin. That 5,000 is the value they wanted to say is your transaction value. Now, instead, if the where RBI reference rate for a currency is not available, the value should be 1% of the gross amount of Indian rupees. So what they say, instead of I go with 1 lakh, I take 50 US dollars or say 100 US dollars, and I'll say, you keep this 100 US dollars, give me 50,000, say for $100, give me 300 Japanese yen, or give me 80 euros. So what I'm doing, I'm giving dollars, I'm buying euros. I'm giving dollars, I'm buying yen. When there is no INR involved, what they're saying, the gross amount of Indian rupees provided by the recipient. So for that, whatever dollars you are bringing, what is the INR value, that will be considered for the purpose of 1% of that shall be considered as your transaction value. Now there is no logic in this. You need to just methodologically understand what is the mechanism for determining the value. So in other case, instead of doing that, neither of the currencies are exchanged in INR, which I talked about. 1% of the lesser of two amounts. You have euros, you have yen. If these two are exchanged, whichever is having a lower currency value converted to INR, that 1% shall be my transaction value. Alternatively, now this is one equation. 95% of the authorized dealers do follow. Whatever I have explained to you, this is just a mathematical equation where banks adopt. This is the value. What I'm going to talk to you is majority of the cases, 95% of the industry follows this practice. What they do, instead of getting into all that, they get into this mechanism where once I adopt this route, entire year I have to go with this route only. What it says, the supplier, the value in relation to supply shall be deemed to be 1% of the gross amount of currency charged for an amount up to 1 lakh rupees, subject to a minimum amount of 250 rupees. So they are saying that 1% of the gross value up to a sum of rupees 1 lakh, where on 1 lakh 1% is whatever you get. They say minimum 250 rupees you have to pay. Alternatively, if the amount is more than 1 lakh rupees, up to 10 lakh rupees, then 1000 plus half % of the gross amount. If the amount is more than 10 lakh rupees, they say 5,500 plus 1/10 of 1% of the currency exchange more than 10 lakh. This is just a mathematical equation, slab system. 250, then 500, then 1000, then 5500. Depending on the currency, my value keeps on moving. This is a mathematical equation which most of the authorized dealers do adopt. Institute material has got a decent examples. For want of time, I'll skip on this valuation computation. This is important. Aid travel. This is at most important for aid travel. So in relation to aid travel agent, what the law says, this provision says, if it is a domestic travel, 5% of the basic fare is my transaction value. If it is for domestic travel, 5% of the basic fare is the transaction value. If it is for international travel, 10% of the basic fare is my transaction value. If you recollect, let us go back to example number 3, what we have discussed. Mr. A individual goes to ABC & Co, who is a traveling agent. Cost of ticket is 15,000. Commission is 500 rupees. What will be the transaction value? That is a question I have asked. Here, the provision says that the value of supply in relation to booking of tickets for travel provided by a travel agent. Please look at the term a travel agent. Travel agent, a travel agent. There is a difference. Agent, travel agent, a travel agent. A travel agent is a person who has been appointed officially as a travel agent, who has been authorized by IATA. Indian Airports Travel Authority. IATA, this is one agency. This is one agency who gives a license to the travel agents for what? For booking of tickets. This IATA is one regulation authority for price regulation and monetary transactions. Monetary transactions. So this travel agent whom we are talking, look into the travel agent. Question: is he just a travel agent? Is he a travel agent? If this gentleman happens to be a travel agent, then on 5% of the basic fare, on 5% of the basic fare, I have to charge my GST. My transaction value is 5% of the transaction value. If this gentleman is not a travel agent, then on the commission, if he's not a travel agent, then only on the commission I have to pay GST. That is good enough. I'll just come to a couple of questions. One question was raised: best judgment is always taken by the department normally. Is the statement valid? Not exactly, Dilip. Not all the time they take best judgment, for the simple reason, as I said, if your business model is really not complicated, like pharmaceutical industry. See, in pharmaceutical industry, out of my experience, I'll share it to you. When we look into this business model, there is around 500 crores. There is 500 crores which is spent on R&D. I'll not name the company, but out of the experience I'm sharing, when you look into the procurement of raw material, I import chemicals, I import machinery. When I import a machinery, there is a R&D unit, there is a manufacturing unit, there is a trading unit. I don't know. This machinery was actually usable in R&D division. This machinery is usable in a live manufacturing division. Second, when I import raw material, this raw material, is it used in my regular manufacturing activity unit or is it used in my R&D unit? Considering the department, the complexity in your business model, they go for best judgment where there is utmost clarity which is missing, where expert like a chartered accountant or a cost accountant, as per the GST law, these are the only two people who have been notified as the special auditors who can be appointed for the purpose of this value determination. So only when there is a complexity in the business nature, they get into this mechanism. Next question. When we apply Rule 32 for those 5 aspects, answers get is value of supply or GST tax payable. Okay. When we apply Rule 32, the answer what we get is value of supply. I don't get GST. Please understand. When I apply my Rule 32, my intention is just to calculate what is my value of supply. My intention is not to calculate GST. For the simple reason, as the heading says value of supply, it just focuses on determining what is your value of supply. Once I know what is value of supply, based on my notification 11 of 2017 or 1 of 2017. 1 of 2017 deals with your goods, 11 of 2017 deals with your services. Based on these two notifications, I go ahead to determine what is my rate of tax. So only my objective is from Rule 32 is find out what is your value. From the value, you will go to the respective notifications, find out the rate of tax, apply that rate of tax over here. Next, coming back. So if it is a domestic booking by a travel agent, then 5%. International booking 10%. Now explanation they have given. What is a basic fare? Basic fare means the part of the airfare on which commission is normally paid by the air travel agent by the airlines. So airlines authorities pay commission to this travel agent. When there is a commission payable, the basic fare on which commission is payable, that is called as your basic fare for the purpose of valuation. So when you have a travel agent, please get a bill from the IATA. When you look into the travel agent bill, there will be number mentioned. So and so is IATA. He will be having IATA registration number. That person is supposed to give you a breakup. What is a cess? What is a tax charged by the authorities? On that, what is this gentleman's GST which is being collected? All these are the elements which will be disclosed on the face of the bill. This is in relation to a travel agent. Next, we move on to insurance. Insurance is a little peculiar for you to understand. Straight away, you understand this way. Let's come to your clause A. If insurance is, if this is there is a gross premium charged by a policyholder, which is in relation to investment. That is like I do investment in an insurance, which is intern investment in primary security market, bond market, or linked with ULIP or etc. If there is an insurance which is linked with ULIP, they say the gross premium charged from a policyholder minus amount allocated for investment or savings on behalf of the policyholder. I have 5 lakh rupees I have given to the insurance fellow for the purpose of investment, which is linked with my ULIP. Where it is linked with ULIP, what they say, that entire 5 lakhs is not subjected to GST. On 5 lakhs, the amount which was actually invested, less that investment, the balance amount is the value of supply. From there, I'll go on to the valuation rules, my notification 11 of 2017 to identify what is the rate of tax. Currently, 18% is the rate of tax for insurance. I apply that 18%. Point number B. In case there is a premium paid for annuity, single premium, it is just one-time payment. I pay 1 lakh, I forget. End of the tenure, on the basis of annuity, I get some money back. What they say, 10% of that single premium is your value of supply. So if there is only one premium which is linked with your annuity, so it keeps on get invested in various funds and you get money out of it. So that scheme, then 10% of the premium is my value of supply. On that 10%, 18% is my GST. Point number C, in all other cases, 25% of the premium for the first year, 12.5% for the second year shall be called as my value of supply. I think clause D was not mentioned. The last paragraph, you see, nothing contained this sub-rule shall apply where entire premium paid by the policyholder is only towards risk cover. Now, this ancillary provision is something which is applicable for most of you. End of the session, please open your vehicle insurance, your health insurance. When you look into your health insurance, whatever premium is there, straight away on that 18% GST is charged. Why? If it is in relation to risk cover, my value of supply is whatever premium I have collected, that is my value of supply. Underline the term risk cover. That premium is towards risk cover in life insurance. Even in motor insurance also, they charge 18% on my premium what I am paying for. So this is one slide picked up from your institute material which deals with my insurance business. Now, this second-hand goods, this is little important. Practically, this is very important. Again, once you qualify, once you are known that you have been in the practice, majority of the people come back to you and ask in relation to old vehicle transactions. I'll give an example to get familiarity with that particular thing. There's one question. Please explain insurance point number A. Yeah, definitely can. I'll come back to my point number A. Yeah. See, this is insurance where we are talking about your other than annuity. First, we have talked about annuity. First case, gross premium is charged from a policyholder, which is meant for allocation in investment, allocation on behalf of this policyholder. Your ULIP or mutual funds or any of the stock investments. I'll give an example. HDFC Bank on my behalf, I'm having an account with HDFC Bank. They say, sir, I take every month some X amount from your bank account. What I do? This X bank, the money which I have taken, it is towards your insurance. What I do? I'll give you a coverage. Say 50 lakhs is the coverage. For 50 lakhs, I take some money. It is not linked with your anything. Rather, it is linked with the ULIP. I keep on taking some amount as a premium, which is invested in a security market or in a structured investment plan. So when there is a structured investment plan, what they say, the amount which is allocated, which is earmarked for investment, that amount, like I have taken 10,000, I've used only 8,000, balance 2,000 I have not used. Then what they say, to the extent the amount which was not used, on that entire amount, there is a GST applicable, which is in relation to insurance. Savings on behalf of the policyholder for insurance part. So this is a scheme which is linked with your ULIP fund. Insurance is also linked. As the business gets complicated, as you fine tune your business, this sort of complexity comes into picture. Unfortunately, I would say this is one sector, insurance is one sector where determination of a scheme, determination of a rate applicable is slightly complicated. Now, I'll come to rule 32, which deals with your buying and selling of second-hand goods. If you look at your friend circle, if you look at your family circle, definitely there will be one person in your circle, in your fraternity, in your entire radius, who is into this buying and selling of second-hand goods. He buys a Innova for 10 lakhs, he sells it for 12 lakhs. He buys an Alto car for 3 lakhs, he sells it for 3 lakh 50,000. He buys a say BMW for say 20 lakhs, he sells it for 25 lakhs. Now keep in mind, should that gentleman read to register under GST? Please understand. Section 22, when I talk about registration, leaving the northeastern states, 20 lakhs is the threshold limit. In relation to goods, the 20 lakhs has been enhanced to 40 lakhs. With respect to northeastern states, that 20 lakhs was brought down to 10 lakhs, gradually was increased to 20 lakhs in relation to goods. So I'm talking about an example. I have a cousin of mine who is into this business activity. Every month he does at least 2 car he buy and sell, and monthly his turnover is say 5 lakhs. Monthly his turnover is 5 lakhs. Now in a year, 12 months, 12 into 5, 60 lakhs. Question to you: should he need to get registered under GST? Should he need to get registered under GST? If you say yes, he has to get registered under GST, next question comes to you: should he need to charge GST? If I say 5 lakhs is what I buy and I sell it for 5 lakh 50,000, on 5 lakh 50,000, if I charge GST 18%, 28%, customer will run away. He'll say, the very reason I am coming to you instead of going to this second-hand dealers in South India, probably there is one agency called Maruti True Value. We call MTV, Kerala-based entity, Maruti True Value. This entity called Maruti True Value, they are into this activity of buying and selling cars. If I go to Maruti True Value and buy any car, they charge GST. Now to save the GST, if I come to any of the agent or dealer who's doing the similar set of business, and if you say even that gentleman has to charge GST, imagine the kind of complexity we have. One, he should get registration. Second, he need to maintain books of accounts. Third, he need to file returns. Fourth, whenever he is making a payment of taxes, there is a scrutiny once in 3 years or once in 5 years for sure for purchase and sale of these assets, whereby transfer of ownership, getting the vehicle registered, showing the owners what is the transaction value, how much is in cash, how much is in bank account. All this becomes Herculean task when we deal with this particular business model. Coming back to my rule 32, which deals with this particular valuation of motor vehicle, it says first and foremost, it is applicable for used goods as such, or after such minor processing which does not change the nature of goods. Starting point is used goods. It is not a brand new. It is used vehicle. If I am a dealer, if I am a person who is dealing with this used goods, then rule 32 comes into picture, where no input tax credit has been availed on the purchase of the goods. 90%, 95% who comes into your showroom is a walk-in customer. They are not registered under GST, unlike the corporate scenario. In corporate scenario, I'll give an example. I'll not name the company. I'll give an example. This corporate, they're into battery manufacturing activity. They have a policy. They have cluster A category of employees who are over and above general manager category. The A category employees who are above general manager, along with the salary, it's a very handsome salary which they pay. Along with the salary, the management HR policy says every 3 years, you are entitled to buy a new car. Value of the car is starting from 10 lakhs to 30 lakhs. First year you bought Honda City. You are with the company for 3 years. End of the 3 year, they say, now I have given 10 lakhs initially. Now I'll give you a budget of 15 lakhs. You buy whatever car you want. Over a period, that 15 lakhs becomes 20 lakhs. Now this gentleman, he has got already Honda City. He doesn't even know how to drive that vehicle. Most of the time, that vehicle is enjoyed by the driver, and he is getting the incentives from the management every alternative years. Now that case, this employee gets an option. Look, you bought a car, you have an option to sell it back to the company at the depreciated value. This company in turn sells it to the agent called Maruti True Value. In that case, when you are enjoying input tax credit, when you are not enjoying input tax credit, when this corporate sells the car to Maruti True Value, they charge GST. A walking customer like me, when I drive my vehicle to this fellow, there is no GST applicable because I'm an unregistered party. So Cars 24 is one business model when we think of very good business model. When a walking customer is there, definitely it's not registered. The question of input tax does not come into picture. When there is a car which is sold by a corporate to this Cars 24, that corporate has to charge GST because there is a transfer of ownership. There is a discount of ownership because of virtue of schedule 1 section 7. I have to charge GST when I transfer it to the Cars 24. So this provision says, rule 32 says that you have not taken input tax credit on the purchase. So you are a dealer who is into used cars. You are a dealer who is selling car as such or with minor processing. What is that minor processing? Tinkering, coloring, refurbishment of interiors, etc. Minor changes you have done. And when you purchase the car, you have not taken any input tax credit. Then what is the value? The value of supply shall be difference between the selling price and the purchase price. I have bought the car at 3 lakhs. I'm selling it 3 lakh 20. My value of supply is 3 lakh 20 minus 3 lakhs. 20,000 is my value of supply. Where the value of supply is negative, it shall be ignored. I bought the car at 3 lakh. I'm selling it 2 lakh 80,000. My value of supply is negative 20,000 minus 20,000. So the rule 32 says that ignore that value of supply. Ignore the value of supply. Now this is what my rule 32 talks about. But practically, please understand, this negative 20,000 may not come into existence at all. Negative 20,000 cannot come into existence at all. If that comes in, always there is a question mark to your transaction value. Why will someone sell at a negative profit margin? Whatever stories you say, the officer will say, your price is not the sole consideration. There is a barter, there is an exchange. Something could have happened. That is the reason you have negative margin. So that is how he will set as your transaction value and he'll get into rule 30. One of your question is asked, sir, is it possible for the officer to set aside my transaction value? Yes, it is possible. Why? Because you are reporting negative. Out of 10 cars I have dealt with, 8 cars have shown profit, 2 cars have shown loss. Then the 2 cars will be picked up and say, at least the transaction value at purchase value I'll go with, because if there is a negative, probably I have to, the officer says, prove me that this value can be accepted as such. The onus is on the assessee to prove that transaction value is my transaction value as per rule 32. There's one question here. Sale and buy, example, sale and buy of 2 cars, monthly annual turnover 60 lakhs. Whether the registration is required or not. Answer to your question, Dilip, yes. My section 22 deals with your turnover. Now here, value of supply. Remember, value of supply is as per section 15, just to say what is my value for the purpose of payment of GST. When I look into the term aggregate turnover, quickly let us come back to the term called aggregate turnover. Please open your institute material, come to the definition of turnover. Yeah, there's one definition called turnover in a state. Turnover in a state means aggregate value of all taxable supplies. Aggregate value of all taxable supplies and exempt supply. Now here, first question, sale of car, is it a taxable supply? Answer is yes. What is the taxable supply? Sale of car. What is the value of the taxable supply? Section 15, the value of supply is this much. What is the aggregate value? Taxable supply. In this example, my car is a taxable supply. What is the value of supply? The value of car is 3 lakhs. For the purpose of Rule 32, the value for the purpose of payment of GST, Section 15, value of taxable supply is 5 lakhs. Now coming back to Section 112, subsection 112. Turnover in a state or turnover in a union territory means aggregate value of all taxable supplies, and exempt supplies made within a state or union territory by a taxable person, export of goods or services or both, interstate supply of goods or services or both, made from state of union territory, etc., excluding CGST, SGST, IGST. So here they have used something called value of taxable supply. Value of taxable supply. My value of taxable supply, read with Rule 32. Read with Rule 32 says that, it says my value of supply is difference between these two. Though my turnover is 60 lakhs, when I look into Rule 32, plus minus all put together is less than 20 lakhs. Then Section 22, registration is not required. My turnover under Section 22, read with turnover in a state, they have used a language called value of taxable supply. Section 15 refers to value of supply, where Rule 32 has said, example of 3 lakh, 3,50,000. I bought a car for 3 lakhs, sold for 3,50,000. The difference between these two is 50,000. So the value of taxable supply is 50,000. When I look into the term of aggregate turnover in state, aggregate turnover, it says value of taxable supply. Let me come back to one definition called aggregate turnover. Aggregate value of all taxable supplies. Again, they say all taxable supply, aggregate value. Here taxable supply, my taxable supply is only 5 lakhs or say 50,000. As long as this particular element is within the threshold limit, answer to your question, though my value is more than 60 lakhs, I wouldn't require to get registration done because my aggregate turnover is less than 20 lakhs. There's one question continuation to this. What if ITC is taken? The simple answer to that, I don't come to Rule 32, where my difference between selling price and purchase price, straight away, whatever selling price is there, on that selling price, I have to charge GST. Example, I bought a car for 3 lakhs. This car is purchased from a company. Company has already charged me, say 20,000 as GST. 3,20,000 is the car value. I bought it at 3 lakhs. Cost I booked to P&L 3 lakhs. 20,000 I have taken to balance sheet as input tax credit. This car of 3 lakhs I am selling at 3,50,000. On 3,50,000, 18% or 28% based on the engine capacity, I have to collect GST from my customer. This difference of 3.5 lakh and 3,50,000 is set aside, and on the transaction value I have to charge my GST. So as per Rule 32, only the difference is applicable when I have not taken input tax credit. If I have taken input tax credit, they will set aside my Rule 32 and say, Baba, whatever you have sale values there, what money you are collecting from your customer, on that charge GST. That is your value of supply. Hope I have answered your question, Khan. Continuation to Rule 32. Second-hand goods. Where purchase value of goods repossessed from a different borrower who is not registered for the purpose of recovery of a loan or a debt shall be deemed to be the purchase value of such goods by the defaulting borrower, reduced by 5 percentage points per every quarter or part thereof. What they say, you have lended money to buy a vehicle. Your customer has defaulted the vehicle. A bank or a financial institution has recovered that money vehicle back. In that scenario, valuation, they say whatever loan you have given, that shall be your purchase value. That value reduced by 5% for every quarter. So if I have given a loan for 1 year, 5% per quarter for 1 year, 5 into 4, 20%. 20% of the value will be reduced as my purchase value. The net value will be the revised purchase value. That will be compared with my selling price, and on that is my value of supply. So banks, people have done bank audit, where you have this recovery tribunal, where any of these banking audits wherever there is a recovery of motor vehicle which has gone to a debt recovery tribunal, DRT. In filling our bank audit report, LFAR, there will be a reference to DRT. If at all, if there is a transaction where a vehicle is going to DRT, my Rule 32 is relevant. How do we determine the sale value and the purchase price and what is value for Rule 32? Next, we move on to vouchers. Yesterday, we have discussed in detail what is an voucher, what is the time of supply for voucher. Simple terms, when voucher is there, the value which the voucher has got fetched, I can use a voucher for goods, I can use a voucher for services. The value, what it is going to be used for redemption, that is my voucher value, Rule 32. I'll give an example. So there is a company. This company gives a voucher to its A category employees. Now it's good to get into A category. Post qualification with a decent knowledge on tax laws and costing laws. Down the line, you also get into that A category. You are into A category class where the HR department says, look, this is a voucher. You can use this voucher for redemption in Taj group of hotels. Whenever you go to Taj group of hotels, when you have a dining at Taj group of hotels, whatever is the bill value, you can use this voucher. This voucher has a value of say 10,000. Use this voucher and redeem that at Taj. So when I go to Taj hotels, the value of voucher, what they say, Taj has sold a voucher to this company. When you have sold the voucher, you fix the value of the voucher is 10,000. So the value which it has got fetched for redemption, that is called voucher value under Rule 32. Then value of this is something which I've skipped when I'm talking about Rule 28. Rule 28 says that when there is a distinct person, when there is a services to be rendered, that is, head office is there in Bangalore, branch office is there in Pune. From head office, I do the bookkeeping, I do the sales invoice generation, I do various activities. My payroll of Pune employees are processed at head office. It will be called as a distinct person. For the purpose of Schedule 1, though there is no consideration, it is deemed to be a supply under Schedule 1, Section 7. That particular aspect, they are saying that because your Pune unit is in the position to take input tax credit, the value shall be deemed to be nil. So please understand, wherever there is a distinct person transaction, head office to branch, branch to head office, wherever there is a service involved, that value of service, shall be deemed to be nil because the other unit is in a position to enjoy its input tax credit. Now, this Kerala Fund Rule 32, this is a newly introduced rule, little important for you to watch for your examination. This 32A, this is applicable only in the state of Kerala, where it says that wherever there is a sale of goods which is taking in the state of Kerala, there is a cess applicable under Rule 32A. What is the value under this Rule 32A? Simple terms, they say, what is the value determined as per Section 15? All the transactions, whatever you have talked till now, Section 15 read with your rules, whatever you have determined as value of supply, that shall be the value of supply for the purpose of levy of my cess. That is the clarity they have given. Rule 33, which talks about your pure agent. This Rule 33 is more relevant from my first example point of view. It says that as a pure agent, I can set off some expenses from my value of supply where I make a payment to a third party on behalf of my supplier. The payment was made by a pure agent on behalf of the recipient of the supply has been separately indicated. I act as an agent on behalf of the principal. When I recover that money from the principal, in my bill, what I'm going to issue, I'm going to show separately what is my money spent. Then in that case, they say you're fitting into the definition of pure agent that can be eliminated from your value of supply. In simple terms, this pure agent comes into picture. This example they have taken. When you spend money and when you recover that money, the recipient of the goods or recipient of the services knows that you're acting as an agent and you don't have an intention to hold title. I have given an example. Assuming I'm a chartered accountant, I get a contract for registration of a company for my client. When I do the company incorporation, I pay something called ROC fees. They have paid 500 and I have paid some various forms have been filled. Total fee I have paid is 3,000. I've said to the client, 20,000 is my incorporation fees and 5,000 is the ROC fee. When I bill, value of supply is 20,000 for the services. As a pure agent, I recover the 3,000 or say 5,000 as it is as a pure agent. Why? ROC knows when Praveen has paid 5,000, this 5,000 is on behalf of the company. This 5,000 has no title to Praveen, and at actuals, when I'm making the payment on behalf of the company as an agent, I have paid that particular fees. So in this scenario, Rule 33 says that you can escape, you can keep away that particular value from your value of supply. Coming to Rule 34. This is one rule. This is very, very important from your final perspective, where this rule says that how do we adopt my forex value? I'll give example this way. I import goods from foreign nation. I export goods to foreign nation. Now, when I import goods into India, say there is a supplier who is there in Germany. This German supplier says the value of consignment is 30,000 euros. How do I convert that 30,000 euros into INR? And at customs, how do I know what is my transaction value? Rule 34 says that Customs Act under section 14 is going to denominate every period, that is every gap of 30 days. This customs authorities come and say this is the notified conversion rate. Unlike RBI every day you change the conversion rate, but customs authorities, they fix one period to one period. This is my rate. So when my consignment comes from Germany, when the consignment has been landed, 30,000 multiplied by the rate fixed by the customs authority shall be the rate for INR. Why? That should be my value of supply. On that value of supply, I charge the GST, the customs authorities, IGST, 28%, 18%, whatever is the domestic value is there, that shall be supplied, that shall be applied on my conversion rate. So in relation to goods, they say, go with your customs rate. Now, in relation to services, I have imported services. My parent company have raised a bill for say technical design charges, for ERP maintenance charges. Every month I get a bill from my parent company for $10,000. Now that $10,000, when I record in my books INR, how do I convert that $10,000 into INR? Can I go with customs rate? Can I go with RBI rate? Point number 2 says exchange rate, value of taxable supply shall be applicable rate of exchange determined as per generally accepted accounting principles. As per my gap, if I say my accounting policy, I'll go with the RBI rate, you are permitted. If I say I go with the customs rate, you are permitted. When I talk about my forex transactions, when you look into notes to accounts, that generally accepted principles are applicable for determining value in my Rule 34. We are coming to Rule 35, the fag end rule in valuation rules. Inclusive basis. What if I have not charged, my contract is a composite value. My contract is a composite value where they have not mentioned, they have not specified what is going to be my taxes included or to be excluded. If the contract is silent, where they doesn't say it is inclusive basis, it is exclusive basis. It says value of supply is inclusive of IGST, as the case may be CGST and CST. If your contract is silent, whatever consideration, whatever money value is you're going to receive, we presume that it is inclusive. For that purpose, I'll say my value of supply is value of supply into tax rate divided by 100 plus tax rate. If my tax rate is 28%, my value, what is the money I have received into tax rate 28 divided by 128, that is going to be my tax amount. So from the total consideration, I eliminate tax amount, I land up with something called the taxable value. Finally, we come to the fag end of the discussion, learning expectation. Once we read section 15, once we read the valuation rules, as a professional, once we get qualified, once we get into the profession, once we get into the corporate world, what is that we need to look from this particular chapter? Understanding the nature of business. Whenever we do audit of a business, whenever we do audit of an SSC, look into your notes to accounts, related party transactions, look into your section, your accounting standard segment reporting. How do I report my segment? One segment to another segment. What is the dependency? Whether my valuation rules have been taken care to the extent of segment reporting, to the extent of my related party transactions. Documentation for various transactions as per the business process setting up the expectation. As I've been telling, there is always a susceptibility for the officer to set aside your transaction value and say, look, this is not the value. I'll go for rule 31 to say this is the best judgment possible. Now, you need to have a documentation. The example of gold ring Pinky, what we are talking, when we have that kind of transaction, then Pinky has given a ring for 3,000. I have written 3,000. What if the officer says that no, it is not 3,000, it is 5,000? Do I have a document evidence? What I would say, I'll get the value of old ring, I'll get the value of new ring, weight of old ring, weight of new ring. I'll get the attestation. The customer will say this is the value I have given, and he confirm on the bill. The document evidence in the business is very, very important for you to take care of your future. Examining the design and architecture of the present system of bookkeeping. As I was telling you, you once get qualified and get into the corporate world, your role is very prominent to design how the bookkeeping has to be done. Related party transactions, how do I get to know? When I run my sales report, when sales register is generated, in the sales register, do I get to know related party transactions, non-related party transactions, stock transfer? How do I do the valuation for stock transfer? What is the scheme of accounting entries? I account sales, I account stock transfer, I account sales others, I account something as export sale. All these transactions, how do I get to know? Related party transactions, non-related party transactions. This is something which is relevant for us to keep in mind as a professional. Plotting various transactions in homogeneous set as for better presentation with legal complaints. This we have discussed. Disclosure in statutory returns. Finally, what is important is what we do, how do we present this information in my statutory returns, and how do I reconcile all these elements with my GST returns, what I'm going to file with. With this, we come to the end of our presentation, and I have covered all the questions raised till now. There are no fresh questions available till now. So we end our conclusion today, and thank you. Good night.